Now, everyone, let me know that whether I am audible. I hope everyone have joined. Give me 2 minutes. Let everyone join the session. Am I audible or not? Am I audible? Everyone respond. You can message me in the chat box given in the course of the video. The voice is okay. No disturbance. Is it clear? Yes. Very good morning, everyone. How are you all? I hope everyone is fine. I welcome you all in CA Final Financial Reporting Exam Oriented Batch. Sir, what is the meaning of exam oriented batch? Let me first give you what actually I mean by exam oriented batch and what I will cover and how it will proceed. So before starting, let me introduce the what will be the nature of batch. So when I say exam oriented batch, so it means I will be focusing from examination point of view. Correct? Means we will cover almost all the concepts. Almost all the concept. It does not mean that I will skip many concepts. I will cover all the concept, but a stress will be given only on important concept. Covering all the concept, focus will be on important concept, because as from my point of view, because if I say I am teaching this new syllabus from the day when the institute introduced it, so I know what are the requirement of ICI. I know from where the question can be asked. So on that experience we'll focus on those points, however covering all the concepts. Correct? So it means all concept will be covered. If I say concept, everyone, all concept will be covered. Focus will be from examination point of view. Examination point of view. Correct? Understood? Now one question is coming in your mind, sir, whether you will do questions also. Yes, of course we will take questions also. Correct? But of course, in this exam oriented batch, which is of 60 to 70 hours, all questions are not practically possible. So what I will do, I will take all the important questions which I think from my point of view may be asked in exam, even though it may be simple, but that important questions will take, and also will take difficult question in this batch. Any difficult question which I think you may face problem while doing it. Correct? Now to understand the information given the question, that question also will consider in this batch. So we'll take important question as well as difficult questions. Correct? Yes, sir. Now, what about, sir, number of hours? How many numbers of hours you will teach? So, as per my expectation, this batch will go up to 60 to 80 hours. Correct? Approximately, I can say it will be between 60 to 80 hours. However, we'll try to cover it in 60 hours only, but it may increase. We don't know right now ki how much extra hours when you take, because the number of question has been increased by the institute in the updated study material. Means last time when I have taken a similar batch, I have completed that batch in around 55 to 60 hours. But with the number of question has been increased, the level have also increased. So of course we need to focus on such point which has been newly introduced by ICI. Correct? Yes, sir. Now, so sir, what will be the number of days you will be teaching? Number of days. So each day I will be teaching 5 hours. Each day I will be teaching 5 hours. Of course, you can say, if I say each day I will be teaching 5 hours, so you can calculate number of days, expected number of days. Understood? Yes, sir. Correct. Yes, sir. Now, about the test. Of course, I will also conduct test for which already a schedule has been given to you all. Means the test, for the test schedule has been given to you all, and those who will be watching the recorded classes, for them schedule will be mailed. So can you see test will be as per schedule? Correct. How many tests will be conducted? 6 chapter wise test will be conducted, and 1 mock test will be conducted. Means final grand test will be conducted, mock test, which will be grand covering the entire syllabus. So test will be conducted by me, for which suggested solution will be given to you all. Means for this solution will be given to you all. So once you receive the solution, you can do the assessment by your own. Means of course, I will not check the paper. I will not be able to check the paper. The self-assessment need to be done. Once you have written the test, do the self-assessment of the test. Correct? Yes, sir. Now, so what about doubt? Sir, what about doubt? So can I say there are two type of student in this batch: the student who are taking live class and student who will listen the class, recorded classes. So for the student who are taking live classes, of course you can ask the doubt during the classes as well as after the classes. During the classes as well as after the classes. So if you are asking me doubt during the classes, so you can ask in the app only, mobile app, Android app. So you can ask the doubt in Android app during the classes. Are you able to understand? And after the class, I will provide you one Telegram group link. After the class, in the Telegram group, you can ask the doubt. Understood? Yes, sir. And those who are listening the recorded classes, they can of course ask the doubt only in Telegram group. So for them I will mail them one Telegram group dedicated only for my student. So you can ask all the doubt whatever coming in your mind in that particular Telegram group. Yes, sir. Understood about doubt? Yes, sir. So I hope you have understood what we are going to cover in this batch, what we are going to cover in this batch, as well as what is the requirement of this batch. What is the requirement? Means what is the objective? Objective of this batch is to prepare for examination. Is to prepare you for examination, so that before examination your entire preparation has been done with the test, so that when you are entering the exam hall you have the confidence about this paper. Means it might happen already you have taken the FR classes from any places, means either from me or from any other faculty, that is not a question. But can you see that classes you might have taken 1.5 year before or 2 year before? So right now it might happen all the concept it is you have forgotten. So it is only a revisionary that will take all the concept, so that every points will come at one point of time, so that you can now apply that concept in a particular questions. Correct? Yes, sir. So this is about the batch. Now what about books, sir? Which books you will follow? So for books, there are two books we'll follow. One is India's Saransh book. India's Saransh book. This will be provided. I'll provide you the hard copy of this. hard copy of India's Saransh book, which will contain all the content of the syllabus. All the content of the syllabus will be there. It will be a multicolored India's book, understood, which has been recently published by me. Correct. And also I will provide you the question bank updated updated as per recent revised study matter issued by ICI. Correct now. So this will be updated as per revised study material which has been recently issued by ICI. Correct. So question bank, it will be of three volume containing all the question of study material, RTP, MTP, and newly added questions. Every questions will be is already incorporated in this question bank. So I'll be providing this question bank, but not hard copy. The For question bank, soft copy will be provided. If you want hard copy, you can purchase the hard copy of this question bank from my website or from my Android app. That is your choice. If you want to purchase. Why I'm providing soft copy? Because already you have such question in your previous study material. Correct now. And newly added question, I have already given a PDF of that newly added question. So normally this PDF, this question bank is not required because already I hope that you have taken the printout of all the newly added questions. Yes, sir. So I will provide you a soft copy of question bank. If you want to purchase hard copy, you can purchase the hard copy from my website. But in this batch, I'll be providing you what the hard copy of India's Saransh book, which will be used for the class, which will be used for the class. Understood? Yes, sir. Now I will go as per the schedule whatever has been provided to you. So schedule, I hope you have already received what schedule I will follow. Correct. Every day I will teach you 5 hours. Correct. And in 5 hours I have some plan to complete the respective chapter. If suppose by any chance if I am not able to complete a chapter, so I may increase the number of hours per day. I may increase. Correct. Now, so in that case, you need to follow whatever I am doing. You are not supposed to say, sir, please stop. Correct now. Whatever hours I am increasing, that you can also listen in an offline mode. Means whenever you have time, you can listen that increased number of hours whenever you have time. Understood? So now can we start? Can we start? Can we start? Yes, if you have my summary book which I have provided in my regular class, that can be also used instead of India's Saransh book. So that summary book can be also used. There are some changes, so the changes automatically you will understand when I will go through what the India's Saransh book. Correct? Yes, sir. Correct. Now, can we start? Bolo. Yes, sir. We can start. So we'll start with what? India's 16. Now, order of chapter I will decide. Order of chapter I will decide. But before I start, let me also inform you one more point. If you see the syllabus, I can divide the entire syllabus into two parts. Correct? First part covers of 5 chapter. First is consolidated financial statement and business combination. Second, financial instrument. Financial instrument. Third, share based payment. Share based payment. Fourth, Ind AS 115. Ind AS 115. So as per my experience, what I think, कि from this chapter in any exam question will be asked, means whatever exam has been conducted in previous attempt, one mandatory question was asked from this topic. Correct now. Now consolidated consolidated financial statement and business combination are actually two chapter, but institute has taken it as one chapter. Correct now. From ICI point of view, this is one chapter only, business combination. So business combination also include consolidated financial statement. Correct now. But they have given in two different units. Correct now. Are you able to understand? So uh, normally a mandatory question will be asked from this chapter, which will be around 50 to 60 marks. 50 to 60 marks question will be from this five topic. So consolidated one topic, business combination one second topic. So it become how many topics? Five topics. Correct? Understood? Now from CFS and business combination together, we can say questions come from 20 to 25 marks. Question 25 marks question will be from first topic. Then from financial instrument, normally 10 marks question will be asked. From share based payment, normally 10 marks question will be asked. And from Ind AS 115, normally 8 to 10 marks question will be asked. I can say 8 or 10 whatever. So normally you can see it is coming 55 marks. 55 marks will be from this topic. Correct? Yes sir. And from second part, second part will consist of other chapter, all other chapter. For example, Ind AS 16, Ind AS 38, Ind AS 36, Ind AS 2, Ind AS 116, etc. Correct now. So all other chapter, balance chapter will come in second category. Now it might happen question may or may not be asked from a particular chapter. Means if I am doing Ind AS 16, so in your exam question may come or may not come from Ind AS 16. Correct now. If I am taking Ind AS 12, question may come from Ind AS 12 or question may not come from Ind AS 12. But the total marks from the second part will be also 50 to 60 marks. 50 to 60 marks. Are you able to understand? I hope you know that in exam question will come for 120 marks. Out of 120 marks, you need to write a solution for 100 marks. Correct now. So you can see I have written 50 to 60 means 60 plus 60 become 120 marks. Understood? So from the second part, also the question may come from 50 to 60 marks. It means, can I say, these are also very important chapter, but we don't know whether the question will come from that particular topic or not. But in the first part, it is 100%, there is a 100% surety. Means I will say there is a virtual certainty. I will say there is a virtual certainty that from first part question will come. Correct? Understood? Have you understood? So can I say this become a important part from examination point of view? You should give more focus on this because you know question will pakka come from this topic. So of course you should focus on these five chapter much. I'm not saying that you should not focus on this, because if you are not focusing on this, then it might happen that if question is coming from that topic, you will not be able to write. So focus will be on both part, first part and second part. But from examination point of view, if you see, if you know this chapter, so can I say out of 60 50 marks you can easily score. Out of 60 50 marks you can easily score if you have done thoroughly this chapter. Understood? Yes sir, we have understood. Correct. Yes sir. Now coming to the topic, the first topic which I will start is India 16. Without wasting your time, I will start the topic. That first topic is India 16, property, plant and equipment. Property, plant and equipment. Correct. So you can see India 16, property, plant and equipment. So can we start? Are you all ready? Everyone respond. Yes sir, you can start. So what is property, plant and equipment? Property, plant and equipment are tangible item. Of course, it is not intangible item. Correct? But can you say all tangible items are not property, plant and equipment, because tangible item can be inventory also. So all tangible items are not property, plant and equipment. The property, plant and equipment are tangible items which satisfy two conditions. What are the two conditions? First condition, held for either production of goods or supply of goods or services. Means either it is used for production purpose or for trading purpose or for providing services or for rental to others. It is given on rent to others or for rental to others or for administrative purpose. So it is either held for production purpose or for supply of goods or services or for rental to other or for administrative purposes, and which are expected to be used for more than one period. which are expected to be used for more than one period. Means if any tangible item is expected to be used for less than one period at the time of acquisition, so it will not be recognized as an item of PP. It will be charged to profit and loss account as an expense immediately. Correct? Yes, sir. Understood? Yes, sir. Now, some clarification is required. When I say administrative purposes, so it will include all other purpose apart from the purpose of sale in the ordinary course of business. Means if any tangible item are held for sale in the ordinary course of business, then it will be an inventory and Ind AS 2 will be applicable. Ind AS 2 will be applicable. But any other purpose apart from held for sale in the ordinary course of business, for example, any item which is held for research and development purpose, so that will be also considered as property, plant and equipment. So a clarification has been given under Ind AS 16 that administrative purpose will be a wider term. It will include all other purpose apart from held for sale in the ordinary course of business. So what they have said, admin purpose includes selling and distribution, marketing, other purpose, research and development purpose, etc, etc, etc. Correct? One more clarification has been given कि any property which are held for earning rental income, any property which are held for earning rental income will not be PP, it will be investment property, and Ind AS 40 is applicable. So any property which are held for earning rental income, any property which are held for earning rental income will not be classified as property, plant and equipment. It will be classified as what? It will be classified as what? Investment property. So investment property are covered under Ind AS 40, but they are valued under cost model given under Ind AS 16. What is cost model? We'll discuss later on. Correct? So any property which are held for earning rental income will be investment property. It will not be classified as property, plant and equipment. But any plant and equipment, you can see property. There are three words: property, plant and equipment. Plant and equipment. So can I say, if I say property is for earning rental income, it will be investment property, and other property will be classified as property, plant and equipment. Correct? Means when I am saying other property, means other property are those property which are used for production, etc, etc, etc. Correct? When I say property, sir, what does property mean? Property means either it is land or building, or land and building. Any part of building will be also property. Correct? Now, so when I am saying property means either land or building, or part of building, or land and building. Correct? What about the plant and equipment? Now, about plant and equipment, even though plant and equipment is held for earning rental income, even though plant and equipment is held for earning rental income, or for any other purpose, in both cases it will be classified as property, plant and equipment, and Ind AS 16 will be applicable. Means exception is only in case of property which are held for earning rental income, then Ind AS 40 will be applicable. If any plant or any equipment is held for earning rental income, then also it will be classified as property, plant and equipment. For example, you have a car and car is given rent for earning rental income, then that car will be classified as what? Property, plant and equipment, and Ind AS 16 will be applicable. Correct? Yes, sir. Then some clarification has been given by Ind AS 16 for spare part, standby equipment and servicing equipment. Standby equipment, servicing equipment is spare part. Whether it will be property, plant and equipment, or it will be classified as inventory. One doubt is there. So what they said, if it meet the definition of PP, simply what they say, if such item meet the definition of PP, then it will be classified as property, plant and equipment, and Ind AS 16 will be applicable. However, if it does not meet the definition of PP, then we recognize it as inventory and will apply Ind AS 2, and it will be recognized as an expense and charged to PL once it is used. So once the item will be used, it will be charged to profit and loss account as an expense. I hope you have understood. Yes, sir. Understood. Correct? Correct. Now, what they want to say about if it meet the definition. So, if you see the definition of property, plant, and equipment, can I say for standby equipment, servicing equipment, or spare part? Always first condition will be satisfied. Only doubt will come about second condition. So, can I say if they are not expected to be used for more than one period, then can I say it will be classified as inventory, otherwise it will be classified as property, plant and equipment. I hope you have understood. Yes sir, we have understood. Now definition criteria you understood. Now we'll come to recognition criteria. Recognition criteria. So what India 16 says, an item of PP should be recognized as an asset if and only if two conditions are satisfied. If and only if two conditions are satisfied. What are the two conditions that we need to understand? So it means once it meet the definition criteria, then also it need to meet recognition criteria to be recorded as an asset in the books of account. If recognition criteria is not satisfied, then it will be not recognized as a PP in the balance sheet. Are you able to understand? So what are the two conditions? It is probable that future economic benefit will flow to the entity from the use of an asset. From the use of an asset, and cost can be measured reliably, and the cost of such item can be measured reliably. Correct? What India 16 says ki for acquired PP, normally the second condition will be always deemed to be satisfied. Means for an item of PP, cost will be always measured reliably. Only doubt will come about first condition, whether there is a whether probable future economic benefit will flow to the entity from the use of an asset or not. Probable means what? More likely though not means chances are more than 50%. Chances are more than 50%. Correct? Now it might happen you purchase one property, plant and equipment, but at the time of purchase you found that it cannot be used for your business purpose. It cannot be used for business purpose due to some whatever, due to some defect, etc., changes in the production method. Correct? Now means you change the production method. Now you are not able to we are not able to use that property, plant and equipment for your business purpose. Then can I say it will be classified as held for sale? If it is classified as held for sale, then Ind AS 105 will be applicable. And if there is no future economic benefit is expected from it, then it will be charged to profit and loss account as an expense. Means if the first condition is not satisfied, then it cannot be recognized as a PP. Either it will be held for sale. Held for sale means apply Ind AS 105, or it will be what? It will be there is no future economic benefit, then charge entire expenditure to PL account as an expense. Means what is the condition? It is probable that future economic benefit is to be derived from the use of such asset. If means if the probable future economic benefit is from the sale of such asset, then Ind AS 105 is attracted. Ind AS 16 is not applicable. Yes sir, I hope you have understood. Yes sir. Once the recognition criteria is satisfied, then we'll do initial recognition. Initial recognition means we recognize the PP in our books of account as an asset at what price? That is a question, at what price? So what India 16 says, it will be recognized initially at cost, at cost. Cost means what? Cost means cash price equivalent. Means any price which is equal to cash price. Correct? The cost means cash price equivalent. So what is cash price equivalent? There are two situations. Situation number one, when the payment is not deferred beyond normal credit period. Means the credit is up to normal credit period. Correct now. So when the payment is not deferred beyond normal credit period, then cost price will be equal to cash and cash equivalent paid, or the fair value of consideration given up. Means in that case cost will be equal to whatever amount of cash you have paid, whatever the amount of cash you have paid. But if the payment is deferred beyond normal credit period, if the payment is deferred beyond normal credit period, then the cost price will be equal to present value of all future payment. Present value of all future payment. Correct now. So whenever credit period is more than normal credit period, credit period is more than normal credit period, suppose the normal credit period is 15 days, but in a special case, in a special situation, we have received a credit period of 1 year, so it is more than normal credit period. So of course some interest element will be there. So they are saying cost will be equal to present value of all future payment. Present value of all future payment is nothing but it is purchase price. It is purchase price at normal credit period. At normal credit period. Normal credit period. So purchase price at normal credit period means what? Means what? It is invoice price less trade discount. Less trade discount. Means can I say trade discount is given at normal purchase only? So when I am saying purchase price at normal credit period, it will be equal to invoice price minus trade discount. Minus trade discount. Yes sir. Can I say in this case we need to also calculate interest, and interest will be equal to future payment minus present value of all future payment, and this interest will be recognized as an expense over the period of credit. Over the period of credit, so it will be recognized as an expense over the period of credit unless it is covered under Ind AS 23. If it is covered under Ind AS 23 means the given asset is property, given asset of given item of PP is a qualifying asset, and the condition given under Ind AS 23 borrowing cost is satisfied, then interest expense can be also capitalized. But normally if nothing is given, this interest expense will be charged to PL over the period of credit. Over the period of credit. I hope you have understood this point. Initial recognition, have you understood? Yes sir, we have understood. Now we need to find out what are the elements of initial cost. What are the elements of initial cost? So elements means what are included in cost price and what should be excluded from cost price. For that there are three situations. Either there will be an acquired asset. Acquired asset. Now acquired can be done either in cash or in exchange of other asset. Either we can acquire in cash or in exchange of other asset. When I say cash, cash will also include credit, correct? Or there can be self-constructed asset. Self-constructed asset. Self-constructed asset. So what will be the cost price? What will be the elements of cost in these three situations that we need to understand? So what Ind AS 16 says, this element of initial cost will be purchase price plus directly attributable cost, that is cost incurred to bring the asset in present location and condition for its intended use. So any directly attributable costs are those costs which are incurred to bring the asset in present location and condition for its intended use. The word is intended use. Intended use. So there is a difference between use and intended use. For example, you are constructing a building for the you are constructing a building for storage of raw material, for the storage of raw material, but before construction, before completion of construction, you started using it for your labor requirement. Are you getting? So it does not mean the construction is completed for its intended use, correct? Now so we need to wait for the completion of the building for its intended use. Yes sir, correct. And the last is initial estimated cost of dismantling and removing the item or restoring the site where it has been located. So we need to also estimate the dismantling cost or removing cost or restoration cost. We need to estimate it because such expenditure will be incurred in future. Can I say there is no doubt about purchase price and directly attributable cost? So what is purchase price? Purchase price means what? Invoice price less trade discount or rebate at non-refundable duties and taxes. I hope you know non-refundable duties and taxes. Whenever we are saying non-refundable duties and taxes, it means these are indirect tax, correct? So it means we are discussing about GST. So for GST, the credit is available, input credit is available. It means it is refundable. So then it will not be added. If the credit is not available, it means it is non-refundable. Then it means it become a part of cost price. Yes sir, we understood. Directly attributable cost examples are transportation cost, installation expenses, site preparation cost, professional technical fee, cost of testing. So it might happen before use, you have done some testing cost. While doing testing, correct? Now there are some expenses incurred. All expenses will be capitalized. But can I say while testing there may be some unit produced, and when the unit will produce it can be sold, so there can be some sale proceeds from the sale of such unit, correct? Now so what India 16 says, this will be capitalized but net of sale proceed from sale of unit produced. So if your testing expense is 1 lakh but you have recovered 10,000 from sale of unit produced, so 90,000 will be capitalized. Understood? Yes, sir. Correct. And can I say once the asset is ready for use, once it is ready for its intended use, then we'll stop capitalization to the carrying amount of the item of PP. Correct. So recognition of cost in the carrying amount of an item of PP ceases when the item is ready for its intended use. Once it is ready, then further capitalization will not be done for initial cost. Yes, sir. We have understood. So what about initial estimated cost for dismantling and removing or restoring the site where it has been located. So what India 16 says, कि there may be some cost which may be incurred in future, but obligation has been created right now. And if there is an obligation on reporting date due to past event and the outflow is probable and amount can be estimated, then India 37 is applicable. Are you able to understand? I hope you have done India's 37 also. So India's 37 says provision is recognized. India's 37 says provision is recognized when three conditions are satisfied. First condition, there is a present obligation arising from past event, outflow of resource is probable and amount can be estimated. So what India 16 says in correlation to India's 37, what they say, कि decommissioning, restoration and similar liability. So this type of liabilities are known as decommissioning, restoration and similar liability. We'll call it PSA DRSL. So what they say, if the obligation of DRSL has been incurred when the item of PP was acquired or during the period when the item is used. So when obligation has been incurred, means there is an obligation arising from past event, and of course two more conditions are satisfied, and India's 37 is applicable. And if India's 37 is applicable, provision for DRSL need to be created. It means the provision need to be created and it will be capitalized to the cost price of PP. Means you recognize provision as per India's 37, but you will add this provision to the cost price of PP as per India's 16. Means what journal entry will do, PP account debit to provision, PP account debit to provision. PP for PP means it will be added to the cost as per India's 16. And provision it will be measured due to what? India's 37. India's 37. And India's 37 says that amount will be estimated as a present value of future cash outflow. Estimated future cash outflow. Means amount will be measured as per India's 37. India's 37. And India's 37 says the amount will be measured at present value of future estimated cash flow. Have you understood this point? Yes, sir. Have you understood? So can I say there may be some situation where there is an obligation. This obligation can be either legal obligation, it can be either legal obligation, or it can be constructive obligation. Constructive obligation are those obligations which is created due to the entity's own action. So it might happen that there is some legal obligation is due to some act, means we need to restore the site because of the legal obligation. So of course there is an obligation. So then if there is a obligation either legal or constructive, then that amount will be added to the cost price of asset, even though that will be incurred in future, correct? However, if the obligation of DRSL has not been incurred when item of PP was acquired or during the period when the item used, means there is a means obligation of DRSL has not been incurred when the item was purchased, means you purchased AC and you have installed it. So of course at the end of useful life you need to dismantle it. So of course there will be some dismantling cost, but right now at the time of purchase there is no obligation to dismantle. If there is no obligation to dismantle, then the cost of dismantling will not be estimated and it will not be added to the cost price of PP. I hope you are understanding, correct? So it will not be capitalized, understood? Correct. However, can I say it will be treated as cost of disposal on derecognition of asset. So it will be considered as disposal cost at a time of derecognition of such asset. Yes, sir. We have understood this point. Correct. Now, borrowing cost will be capitalized as per the requirement of Ind AS 23. The borrowing cost can be capitalized if it meet all the condition of Ind AS 23. Similarly, one more point has been given. Government grant received may be deducted from the cost price of PP as per Ind AS 20. May be deducted because Ind AS 20 has given two options for the government grant related to depreciable asset. Either it can be treated as deferred income or it can be deducted from cost price of asset. So it depends upon what accounting treatment you are following. If you have decided to deduct government grant from cost price of asset, so Ind AS 16 says then this government grant can be deducted from the cost price of asset as per the requirement of Ind AS 20. As per the requirement of Ind AS 20. Understood? Yes, sir. Let me take one example. On 1/4/2017, a PP was acquired for rupees 50 lakh subject to a trade discount and GST of 18%. Credit of GST is not available. Means can I say it will be added? It will be added. Bolo. Have you understood this point? It will be added. So what will be the purchase price? Purchase price will be invoice price minus trade discount, that is 10%. It will become 45 lakh. We'll add 18% GST. 18% GST will be 8 lakh 10,000. So this become purchase price. In the purchase price, we'll add directly attributable cost and initial estimated cost of dismantling, etc. to what they have given. Other directly attributable cost are 5 lakh. This 5 lakh will be added. Yes, sir, it will be added. Useful life of PP is 5 years. As per the applicable law, means legal obligation, PP need to dismantle at the end of useful life. Estimated cost of dismantling is 6 lakh. So we need to add 6 lakh. Not we are not supposed to add 6 lakh. We'll add present value of 6 lakh. Present value of 6 lakh. So appropriate discount rate they have given 10%. So of course you can find out present value of 6 lakh. You are expert in that. So can I say we'll add what? Initial estimated cost of DRSL, that will be the present value of 6 lakh for how many year? 5 year. Discounting factor should be calculated at a rate of 10%. Yes sir. Directly attributable cost will be added, that is 5 lakh. This is the cost price of PP. This will be cost price of PP. Understood? Correct. Can I say this will be recognized as provision? And can I say provision should be subsequently recognized as per Ind AS 37. So for provision, Ind AS 37 need to be applied. Ind AS 37 need to be applied. Understood? Yes sir, understood. Correct. This much, any doubt? Are you able to understand whether my speed is okay? Everyone, respond. Are you able to understand whether my speed is okay? Respond. Everyone, is speed okay? Can I proceed? If you are finding any difficulty, I'm waiting for 2 minutes. You can write down in the chat box either of YouTube or in the Android app. Yes sir, speed is okay. Okay, can I proceed? Yes, sir. Now, so I hope you have understood the elements of initial cost. Now we'll come to the self-constructed asset. So what India 16 says, for the self-constructed asset, normally whatever principle we have discussed right now, that will be only applicable. Means whatever we have discussed in our previous concept, the same principle will be applicable for self-constructed asset. But can I say whenever we construct the asset, there are two type of costs. One is specific cost and one is allocable cost. Correct? So we need to identify which costs are specific, we need to identify which are allocable costs. If there are any allocable cost, so that cost should be allocated as per the ratio of allocation. I think in costing you have done about the ratio of allocation. However, in FR exam they will provide you the ratio of allocation. Ratio of allocation. So can the component of cost will be specific cost and allocable cost. Component of cost will be specific cost and allocable cost. However, can you say whenever there is a construction, there can be any abnormal loss. So that abnormal loss during the construction activity should be excluded. Should be excluded. So abnormal loss, if any, will be charged to profit and loss account as an expense. It will not be capitalized to the cost price of an item of PP. Correct? Yes, sir. Any internal profit included in the cost, you, I hope you have done departmental chapter 1. An item is transferred from one department to another department, then it is transferred at transfer price, which is inclusive profit, inclusive of profit. So it might happen ki the cost includes some internal profit. So what India 16 says, that internal profit should be eliminated from cost, should be eliminated from cost. Correct? Yes, sir. Of course, this is what point which is understood, understood point. Yes, sir. Then third point, which is a very special point from where question can be asked in exam. The point says any income and related expense of any incidental operation, any income and related expenses of any incidental operation during the construction or development of an item of PP are recognized in PL, are recognized in PL. Correct? Now, for example, I'll just give a simple example. Suppose this is rent, this is land, and the construction is going on in two phases, phase 1, phase 2. Right now we are doing construction in phase 1 and phase 2 is idle. So we might give phase 2 for car parking facility to public at large. Means this is given for parking. This is given as parking area to public at large. So whenever it is given as parking area, so some expenses will be incurred and some income will be generated. But can I say these are not directly attributable to construction activity. Therefore, this will be transferred to PL. It will not be adjusted with the cost price of an item of PP. Yes, sir. Understood. What are excluded from cost price? What are excluded from cost price? In simple word, any expenses which are not directly attributable cost for bringing the asset in present location and condition for its intended use will be not capitalized. That will be charged to profit and loss account as an expense. Examples are given for clarification in India 16. What are the example? Cost of opening new facility, means inauguration expenses will not be capitalized. Cost of conducting business in a new location or with a new class of customer, relocation cost will not be capitalized. When you are relocating your plant and machinery from one area to another area, that will not be capitalized. Cost of introducing a new product or services, if you want to introduce a new product, so you need to incur some advertisement expenses, so that will also not be capitalized. Correct? Initial operating loss, whenever you start a new business, in some period you need to incur some losses for some period, initial operating loss, so that will also not be capitalized. Correct? Cost incurred after the asset is ready for its intended use till the asset is put to use, means once the asset is ready, capitalization will cease. Now even though asset is not put to use, so any expenses which are incurred after the asset is ready and until the asset is put to use will not be capitalized. It will be charged to profit and loss account as an expense. Correct? Yes, sir. Correct. Any administrative and other general overhead will not be capitalized unless they are directly attributable. If there are some admin expense which are directly attributable, then it will be added. Then it will be added. Simple. Yes, sir. Now, what about PP acquired in exchange of non-monetary asset or a combination of non-monetary asset and monetary asset? Understood the topic? Means PP is acquired but not in cash. It is acquired in exchange of non-monetary asset or in exchange of non-monetary asset and monetary asset. Correct? Yes, sir. So simple. Cost price of PP acquired will be equal to cost price of PP acquired will be equal to fair value of asset given up plus minus cash adjustment. Plus minus cash adjustment means if cash is paid, so we'll plus it. If cash is received, then we'll minus it. Understood? Yes, sir. So fair value of asset given up plus minus cash adjustment or fair value of asset received, whichever is more clearly evident. Whichever is clearly evident means we need to recognize at such fair value for which evidence is there, for which there is more evidence. Correct? Now understood. So how to determine this fair value? This fair value is determined and measured as per India's 113. As per India's 113 means wherever we use fair value term, the fair value is measured as per India's 113, not as per India's 16. This fair value will measured as per India's 113. Now, how to measure fair value? That is not discussed under India's 16. So we'll discuss that when we'll do India's 113. Correct? So fair value of asset given a plus minus cash adjustment of fair value of asset received, whichever is clearly evident. Now there can be three situations. This is known, this is not known. This is not known, this is known. This is known, this is known. Three situations. Correct. In this situation, no doubt, cost price will be equal to fair value of asset given up. In this situation also, no doubt, cost price will be equal to fair value of asset received. Can you see, in this a doubt will come because both are evident. Fair value of asset given up and fair value of asset received, both is evident. So in this situation, first preference will be always given to this. First preference will be always given to this, means Ind AS 16 says that cost price of PP acquired will be equal to fair value of asset given up. Fair value of asset given up means in this case this will be answer. Now fourth situation is what? This is also not known, this is also not known, means both are not measurable. Correct. Now you can understand three situations. I hope you are understanding. The fourth situation is that fair value of both assets are not reliably measurable. Then what India 16 says, if the fair value of asset are not reliably measurable or exchange transaction lacks commercial substance. Exchange transaction lacks commercial substance means the exchange asset are similar. Exchange asset are similar. Correct. Now it means exchange of similar asset, exchange of similar asset. So can I say if I exchange a similar asset, so there is no future economic benefit, means I am not deriving any extra future economic benefit, means my future economic benefit remain unchanged. Therefore, can I say such transaction lacks commercial substance. Such transaction lacks commercial substance. So what India 16 says, whenever a transaction lacks commercial substance, then we should not recognize any gain or loss on such transaction. We should not recognize any gain or loss on such transaction. Therefore, the cost price of PP acquired will be equal to carrying amount of the asset given up plus minus cash adjustment. So what is the meaning of carrying amount of the asset given up? Carrying amount means net book value. Net book value means what? After depreciation and impairment loss. After depreciation and impairment loss. Understood? Yes sir, we have understood. Have you understood? PP acquired in exchange of non-monetary asset or a combination of non-monetary asset and monetary assets? So first preference will be given to fair value of asset given up. If it is not known, then fair value of asset received. If both are not known, then carrying amount of asset given up. Carrying amount of asset given up. But be careful, cash will be adjusted either with the fair value of asset given up or carrying amount of the asset given up. Cash will not be adjusted whether paid or received with the fair value of asset received. Fair value of asset received. Understood this point? Bolo. Yes sir, understood. Have you understood? Yes sir, understood. Correct. So we have understood initial cost and initial recognition. Initial recognition will be done at cost price. Initial recognition will be done at cost price. Now we'll come to subsequent cost. We'll take question at the end. We'll take question at the end so that all the questions, important question we'll do at the end. Yes sir. First we'll do the concept, then we'll take the questions. Chalega? Yes sir. Now, subsequent cost means what? Cost incurred after initial recognition. Any cost which is incurred after initial recognition. There are three types of subsequent costs. One is known as day-to-day servicing cost. Then second is known as replacement cost, and third is known as major inspection cost. So what India 16 says, if for any subsequent cost also we need to apply recognition criteria. What recognition criteria says, if it is probable that future economic benefit will arise from such expenditure and the cost can be measured reliably, then it will be capitalized or charged to profit and loss account as an expense. Correct. Now understood? So it means we need to apply recognition criteria. If recognition criteria satisfy, capitalize, otherwise charge to profit and loss account as an expense. So for day-to-day servicing cost, India 16 says it is normally a routine repair and maintenance cost. This will never increase the future economic benefit. Therefore, it will never meet the recognition criteria. Therefore, it will be charged to PL account as an expense. As an expense. Correct? Have you understood this? Bolo. Yes, sir. And about replacement cost and major inspection cost. About replacement cost and major inspection cost, what this is, if the recognition criteria is satisfied. Because when you replace a part, if you replace a component of an item of PP, so that will be replaced for some period, 3 year, 5 year, so it has some useful life. So of course it will provide some economic benefit for some period. For some period. So recognition criteria is satisfied in that case. Correct. Now so what they said, कि cost of replacement or inspection cost is added to the carrying amount of the asset. Cost of replacement or inspection cost will be added to the carrying of amount of the asset. Correct. Means the cost of new part, cost of new part, and cost of current major inspection will be added to the carrying amount of an item of PP, and carrying amount of the part replaced, carrying amount of the part replaced or previous inspection, carrying amount of part replaced or previous inspection should be derecognized as per derecognition principle. Correct. Now I hope you all know that for depreciation we follow component accounting. So what is component accounting? Component accounting means each part of component having significant cost in relation to the total cost of an item of PP should be depreciated separately. Means, can I say, if a item of PP, if an item of PP has four significant parts, part 1, part 2, part 3, part 4, part 5, five significant parts, correct, having different useful life. This is 10 year, this is 5 year, this is 2 year, this is 15 year, this is 20 year. So can I say each component has their own life? So what India 16 says, now for depreciation will follow component accounting, and each component having insignificant cost will be depreciated separately. So can I say this will be depreciated for 10 year, this will be depreciated for 5 year, this will be depreciated for 2 year, this will be depreciated for 4 year, there sorry 15 year, this will be depreciated for 20 year. So can I say if they are depreciated separately, so it means at a time when the replacement cost is incurred, can I say we know the carrying amount of old part, and if you know the carrying amount old part, so that need to be derecognized. That need to be derecognized because that is removed now. So old part will be removed, new part will be added, new part will be added. Understood? If recognition criteria is satisfied, if recognition criteria not satisfied, entire replacement cost and major inspection cost will be charged to profit and loss account as an expense immediately. As an expense immediately. Understood this part? Have you understood? So what is major inspection cost? Normally what happens, there are some plant which require inspection cost, not we are not discussing about routine repair and maintenance. This major inspection cost is required after every 2 or 3 years. For example, for aeroplane, as per National Aviation Act, rehauling expenditure is required after 3 years. So that is major inspection cost. Means each part will be inspected and the amount of expenditure will be also in crore. So that is major inspection cost. So major inspection cost will give benefit for next 3 years. The recognition criteria will be satisfied. Therefore, it will be charged. Therefore, it will not be charged to PL as an expense. It will be capitalized for how many years? 3 useful life. 3 useful life. Understood? Yes, sir. We have understood. Correct. This also you have understood. So we have understood what initial cost, we have understood subsequent cost. Now we'll come to subsequent recognition. Subsequent recognition means what? Measurement after initial recognition at each reporting date. Reporting date means balance sheet date means 31st March. Yes, sir. Correct. So what will be the recognition? What will be the measurement principle on each reporting date? What India 16 says, now entity has two options. Either they can use cost model or revaluation model. Cost model or revaluation model means it is an option given to entity either to use cost model or revaluation model. Either to use cost model or revaluation model. But this option is class wise, not item wise. Not item wise. Correct. Means the entity can avail this option for class of PP, not for an item of PP. For example, we have two class 1 and class 2. In class 1 we have land, in class 2 we have building. Correct. Now land we have item A, item B. Building we have item C, item D. Now if you want to revalue A, you need to also revalue B. Means revaluation model, if you want to offer land A, it means you need to also offer all the item in that particular class. However, if you have opted revaluation model for land, so you can offer cost model for building. Cost model for building. Correct now. So it is class wise, not item wise. It is class wise, not item wise. Correct. Yes, sir. Now, under cost model, how to calculate carrying amount is very simple. Cost minus accumulated depreciation minus accumulated impairment loss. Case depreciation will be calculated as per Ind AS 16 only, but impairment loss will be calculated as per Ind AS 36. Means for impairment loss, we need to go to Ind AS 36. Understood? Yes, sir. Correct. Now, revaluation model means what? You need to recognize that fair value on revaluation date. Fair value. Fair value on revaluation date. It is not fair value less cost to sell. It is fair value. Correct now. So please just try to understand. This is what fair value. Now there are two terms, fair value and fair value less cost to sell. So revaluation is not done at fair value less cost to sell. Revaluation is done at fair value. Fair value में होता है, fair value less cost to sell में नहीं होता है. Understood? Means there are some asset, biological asset, etc. For biological asset, initial recognition is done at fair value less cost to sell. So there are two different terms, fair value and fair value less cost to sell. Correct? Are you able to understand what I am saying? Fair value less cost to sell. Correct? So this is not applicable. Fair value, and this fair value is measured as per Ind AS 113. As per Ind AS 113. Correct. So it means you need to measure fair value on revaluation date less subsequent accumulated depreciation less subsequent accumulated impairment loss. This will be the carrying amount of PP at a time of on reporting date. On reporting date. Understood? Yes, sir. Understood. Yes, sir. Now, about revaluation model, let us discuss about revaluation model. If an item of PP is revalued, then entire class of item to which such entire class of PP to which such item belong should be revalued. Means revaluation of model can be applied class wise, not item wise. Yes, sir. Frequency of revaluation, sir. Should we go for annual revaluation? Correct. If you have opted for revaluation model, answer is no. What India 16 says, if an item of PP experience significant changes in fair value, then revaluation is carried on annual basis. Correct. But in other case, when the item of PP does not experience significant changes in fair value, then revaluation can be made after every 3 to 5 years. After every 3 to 5 years. Understood this point? Correct. Now, revaluation can be done either on annual basis or after every 3 to 5 years, that depending upon situation. But can I say the Ind AS 16 is silent when to do revaluation, so it can be done at any point of time during the year. So at any time during the year, at any time during the year means it can be done at the beginning of the year, at the mid of the year, at the end of the year, as per the management discretion. As per the management discretion. Understood? Means suppose we purchase an asset on 1/4/2020. So initially it will be recognized at cost model, means at cost, and suppose cost is 1 lakh. Correct. Now on 31st March 2021, correct, there is no significant changes in the fair value, but we opted revaluation model. Means entity has opted revaluation model, but there is no significant changes in the fair value. Means can I say there will be no revaluation? No revaluation. Are you able to understand? Entity has opted for revaluation model, but there is no significant changes in the fair value. There is no significant changes in the fair value. Means it is approximately right now also equal to 1 lakh. So can I say there is no significant changes in the fair value, then there is no revaluation required. It does not mean we are following cost model. It means we are following revaluation model, but no revaluation required. No revaluation required. Are you able to understand what I am saying? Yes, sir. Yes, sir. We have understood. Yes, sir. Correct? Yes, sir. Now, what will be the accounting treatment of revaluation? Accounting treatment. Now, accounting treatment depends upon whether it is first time revaluation or subsequent revaluation. Subsequent revaluation means what? Second, third, fourth means after first time revaluation. After first time revaluation. Understood? Are you getting? Yes, sir. Now, for first time revaluation, what Ind AS 16 says, there can be upward revaluation or downward revaluation. If there is an upward revaluation, the gain will be credited to OCI. OCI means what? OCI means for other comprehensive income. Other comprehensive income. I know you all know now कि statement of PL have two part. Now statement of PL have two part. One is PL and other is OCI, other comprehensive income. So this gain will be transferred to OCI as revaluation surplus. As revaluation surplus. So it will be credited to OCI as revaluation surplus. Yes, sir. Correct. Downward revaluation, it will be charged to profit and loss account as an expense. So it will be charged to PL as an expense. Subsequent revaluation will depend upon previous revaluation, whether previously there was an upward revaluation or downward revaluation. Now previously if there was upward revaluation, now also upward revaluation, then it will be credited to OCI as revaluation surplus. But previously upward, now downward. previously upward but now downward. So of course there is a decrease. So what they said, this decrease will be first adjusted with revaluation surplus in OCI to the extent available. Means this will be debited to OCI in revaluation surplus to the extent available, and the balance loss will be debited to PL. Balance loss will be debited to PL. So this will be charged to revaluation surplus to the extent available and charge PL for the balance amount if any. Correct. Now, if previously downward revaluation, now downward revaluation, then no issue. It will be charged to PL as an expense immediately. But previously downward, now upward. Previously downward, now upward. So of course, if now upward, there is a increase. So what they say, this increase will be credited to PL to the extent of previous decrease. This increase will be first adjusted to the PL, will be credited to PL to the extent of previous decrease, and any extra gain, excess gain will be transferred to OCI as revaluation surplus. Will be transferred to OCI as revaluation surplus. Understood? I hope you have understood. Yes, sir, we have understood. Correct. Accounting treatment of revaluation understood. Now coming to accounting treatment of revaluation surplus. Accounting treatment of revaluation surplus. Now accounting treatment of revaluation surplus means what we'll do about revaluation surplus if there is some revaluation surplus in the balance sheet. Now, two options has been given for the accounting treatment of revaluation surplus. First option says this revaluation surplus of an item of PP may be transferred to retained earning on derecognition of the asset. Means when the asset is derecognized. So can I say when the asset is sold, the gain is now realized. So if it is now realized, the realized gains will be transferred to retained earning because now it is available for distribution of dividend to shareholders. So till it is not sold, not derecognized, that revaluation surplus are unrealized gain, and therefore unrealized gain will not be transferred to retained earning. Understood? The first option say revaluation surplus of an item of PP, of an item of PP. So this accounting treatment is item wise. Accounting treatment is item wise, means you are doing accounting item wise, not class wise. Correct now? The revaluation surplus of an item of PP may be transferred to retained earning when the asset is derecognized. Second option, which is more appropriate, I will say, which is more appropriate, what they say, कि portion of revaluation surplus, portion means some amount of revaluation surplus, means a portion of total revaluation surplus may be transferred to retained earning during the useful life, during the remaining useful life of such asset. So what portion? So this portion which need to be transferred from revaluation surplus to retained earning will be an amount equal to additional depreciation due to revaluation. Means an amount equal to additional depreciation due to revaluation will be transferred from revaluation surplus to retained earning. Revaluation surplus to retained earning. Correct. How to calculate any additional depreciation due to revaluation? It means depreciation on original cost, means depreciation on original cost compared with depreciation on revalued amount. So you will compare depreciation revalued amount minus depreciation on original cost. The difference will be what? Additional depreciation. Now for your clarification, additional depreciation are charged to PL, means we are not discussing about accounting treatment depreciation. Depreciation of whatever nature will be charged to PL. Right now we are discussing the accounting treatment revaluation. So what journal entry we are doing for these revaluation surplus means OCI will be debited. Everyone, OCI revaluation surplus account debit to retained earning, and this journal entry will be done at the end of useful life, means on derecognition of asset, when the asset is derecognized with the full amount of a revaluation surplus. Correct? In this case, the same journal entry will do OCI revaluation surplus account debit to retain earning. Journal entry is same, correct? But this will be with the amount of additional depreciation. Means amount of additional depreciation will be transferred from revaluation surplus to retain earning. And this will be during the useful life of the asset. Suppose remaining useful life is 3 years. So this will be first year, second year, third year. This will be same journal entry. Understood? Correct. If question is silent, from my opinion, you should give both accounting treatment exam. Question silent है तो ये करके बता दोनों, means you need to give both the accounting treatment from examination point of view. However, from examination point of view, first option is simple to apply. First option is simple to apply. Yes, sir. Correct. Now, what will be the techniques of accounting treatment means adjustment of carrying amount of asset due to revaluation. Adjustment of carrying amount of asset due to revaluation. So they have given two technique. Technique means we are discussing right now about presentation. Presentation of PP in balance sheet. Presentation of PP in balance sheet. There are two techniques given for presentation of an item of PP which is revalued. First technique, what they say, accumulated depreciation is eliminated against gross carrying amount. Accumulated depreciation need to be eliminated from gross carrying amount means on the date of revaluation we pass one journal entry accumulated depreciation to PP means entire past accumulated depreciation will be adjusted to the gross carrying amount of PP and then we'll pass one journal entry PP account debit to OCI revaluation surplus. Revaluation surplus means if I take this example, before revaluation gross book value is 1 lakh, accumulated depreciation 60,000 and net book value is 40,000 and revaluation upward revaluation is 1 lakh, upward revaluation is 80,000. So can I say after revaluation the carrying amount is 1 lakh 20,000. Now the question is that what will be journal entry for this 80,000? So this journal entry of this 80,000, no doubt it will be PP account debit to OCI revaluation surplus. So when we say PP account does not mean net book value. PP account means gross book value. So when we say PP account, it represents gross book value. So can I say this 80,000 will be added to the gross book value, and because it is added to the gross book value, what India 16 says accumulated depreciation will be eliminated. Means whatever accumulated depreciation will be eliminated from gross carrying amount and that was 60,000 means now accumulated depreciation will become nil. Accumulated depreciation will become nil means you can see after this what is the position after revaluation. So can you say from 1 lakh 60,000 will be eliminated and 80,000 will be added to it will be 1 lakh 20,000. Accumulated depreciation will become nil and gross book value will become 1 lakh 20,000 means in your balance sheet what you will say property plant and equipment gross book value is equal to 1 lakh 20,000 minus subsequent accumulated depreciation nil and net book value is equal to 1 lakh 20,000. Have you understood? And can this is the fair value and subsequently you will charge depreciation on this fair value only. Yes, this is technique number one. But can I say there is some confusion, there is some confusion for this presentation because if you inform this information to the user of financial statement, can I say they will be confused and they will think that this is what a new asset acquired because no depreciation has been charged. You can say depreciation become nil. So it might give some, I will say it might not give some reliable information to the user of financial statement. Therefore, India 16 has also given technique number 2. So what technique number 2 says, gross carrying amount is restated proportionately to the change in the carrying amount. I am expecting one question on this. I am expecting one question from this. So it is very important from examination point of view. Gross carrying amount is restated proportionately to change in the carrying amount. Means if just try to understand, before revaluation it is 1 lakh, accumulated depreciation 60,000 and net book value is 40,000 and increased by 80,000, so net book value 1 lakh 20,000. So what India 16 says, this gross book value will be restated proportionately. This gross book value will be restated proportionately means if net book value is 1 lakh 20,000, sorry, if the net book value is 40,000, then gross book value is 1 lakh. So if the net book value is 1 lakh 20,000, what is the gross book value? So we'll apply cross multiplication unitary method. Correct now? Are you getting what I am saying? Yes, sir. We are able to understand. So it means you need to apply proportionate calculation and you need to find out the restated proportionate amount of gross book value. So it will be what? 1 lakh 20,000 divided by 40,000 into 1 lakh. Correct now? Which will be equal to 3 lakh. Which will be equal to 3 lakh. So it is restated proportionately and difference between these two will be accumulated depreciation. And case this will be increase in PP, this will be increase in accumulated depreciation. So what journal entry you are doing? You will say PP account debit to accumulated depreciation. So PP will increase by 2 lakh, accumulated depreciation will increase by 1 lakh 20,000, and difference will be OCI, that is revaluation surplus, transfer to, means it will be what, 80,000 only. So to OCI revaluation surplus 80,000, means whatever techniques you are using in both technique revaluation surplus remains same, only the presentation will be different, only the presentation will change. Means in this, how to present in balance sheet, PP gross book value is what, 3 lakh, accumulated depreciation is what, 1 lakh 80,000, 1 lakh 80,000, and net book value is what, 1 lakh 20,000. Correct. Understood. Now in both cases, the subsequent depreciation will be in revised carrying amount. You can see revised carrying amount in both cases is 1 lakh 20,000. So subsequent depreciation will be applied on the revised carrying amount, and you can see revised carrying amount is 1 lakh 20,000 for the, for remaining useful life, for remaining useful life. Have you understood this point? Batao. Have you understood this point? I hope you have understood. Correct? Yes, sir. Any doubt in this? Any doubt in this? Have you understood? Yes, sir, we have understood. So with this, we completed revaluation. We have understood the revaluation. I hope you have understood the revaluation part. Yes, sir. We have understood. Now coming to the depreciation. Depreciation will be easy. What is the meaning of depreciation? For your kind information, depreciation does not mean decrease in the value of asset. Decrease in the value of asset means what? Downward revaluation or impairment loss coming soon in your life. Means if you have not done, then it is done as per Ind AS 36. Depreciation does not mean decrease in the value of asset. Depreciation means systematic allocation of depreciable amount over the useful life of the asset. So it is the allocation of depreciable amount over the useful life of asset. Yes, sir. Yes, sir. Correct. Can I say depreciation should commence from the date when the asset is ready for use, or from the date when the asset is put to use? So it will be commence from the date when the asset is ready or available for use. Intended use. Not use. Intended use. Correct? Yes, sir. So for depreciation, put to use is not relevant. Ready to use is relevant. Yes, sir. We understood. Now depreciation will cease from which date? From the date, means we will stop charging depreciation on the item of PP from the date when the asset is classified as held for sale or asset is de-recognized, whichever is earlier. Whichever is earlier. Yes, sir. Yes, sir. Correct. Component accounting, I hope you have understood that now Ind AS 16 mandated the component accounting for depreciation. Every component of an item of PP with cost which is significant in relation to total cost will be depreciated separately. Means for depreciation we apply component accounting. For depreciation, for the entire item will be recognized as an asset. Means for example, if I say aeroplane, so can I say aeroplane has many components? Suppose component A, engine, body part, furniture fixture, AC, compressor, etc., etc., and each component may have different useful life, and the component may have significant cost. Correct. Now, so for depreciation we need to find out component A, component B, component C, component D, component E, etc. But for depreciation we'll do component accounting, but we'll not say component A account debit, component B account debit, component C account debit. ऐसा नहीं करेंगे. For recognition we'll say aeroplane account debit to cash or bank. Understood? Yes, sir. Understood. Correct. Now residual value, residual value, it is an estimated amount to be currently obtained on the realization of such asset. Correct. If the asset is of same age as it will be at the end of useful life. So this will be given in the question, residual value. depreciable amount if cost model, revaluation model. So under cost model, it will be cost minus residual value. Under revaluation model, it will be fair value minus residual value. Can I say at a particular point of time, residual value will remain same whether you are using cost model or revaluation model? Means suppose you are at year 3. So either you are using cost model or revaluation model, residual value amount will remain same. Means residual value estimation will not be changed because of cost model or revaluation model. I hope you have understood what I am saying. Yes, sir. Now useful life means what? Either it is based on the period over which the asset is expected to be used, or it is based on number of production expected to be obtained from the use of such asset. If it is based on number of year or number of month, etc., then we use either SLM or RBM, straight line method or reducing balance method. If it is based on number of production, then we use production unit method. Simple. Yes, sir. Correct. Now, now there are two special point. Two special point. Can you say under production unit method, depreciation is based on number of unit actually produced. So suppose in a year, if no production is carried, so number of production will be 0. So if number of production is 0, what in day 16 says, then depreciation will be also 0. Now depreciation is 0, it does not mean we have ceased depreciation. For that particular year, there is no depreciation. It does not mean we have stopped charging the depreciation. Correct now. So under PUM, depreciation can be 0 unless there is no when there is no production. When there is no production. Similarly, it might happen at a particular point of time. At a particular point of time, residual value is more than carrying amount. So if the residual value is more than carrying amount, then also depreciation will be 0. It does not mean that we have ceased charging depreciation. Correct now. So what clarification they have given, the above situation will not be considered as ceasing of depreciation. Ceasing of depreciation. Simple. Yes, sir. We have understood. Depreciation method, whatever depreciation method you are using, that should reflect the pattern of future economic benefit to expected to be consumed by the entity. Correct now. Means depreciation method will depend upon the pattern in which future economic benefit are expected to be consumed by entity. Can I say if the pattern is even throughout a useful life, SLM method, if the pattern is diminishing, then we use diminishing method or reducing balance method. If the pattern is based on number of production, then we use production unit method. Simple. Yes, sir. Then changes in useful life and residual value and depreciation method. So can is this all three useful life, residual value, depreciation method are accounting estimate. So this depreciation method is also accounting estimate, not accounting policy. As per old accounting standard 10, AS 10 old, now AS 10 has been revised. This depreciation method we used to say accounting policy, but that was 100% wrong because this depreciation method is based on expected future economic benefit. Correct now. So it is also an accounting estimate. It is also an accounting estimate. So if these are accounting estimate, can I say this may change if the circumstances changes. So what they say, residual value useful life depreciation method should be reviewed at least at the end of each financial year, and any such change should be accounted as changes in accounting estimate, and accounting will be done as per Ind AS 8, means on prospective basis or prospective basis. Yes, sir. Correct. Land and building. Okay, land and building are two class of a asset. So even though you purchase land and building together, okay, land and building should be considered separately for what? Depreciation. Okay, say buildings should be depreciated separately as per their own useful life. And case land is not a depreciable asset because it has indefinite life. The life of land is indeterminable. Are you getting? So land is not a depreciable asset. Therefore, no depreciation will be charged on land. But there are some cost of land may have limited life. Suppose you have done some improvement in the land. So whatever improvement cost you have incurred on land, that will be added to the cost price of land. But that improvement cost may have limited life. Means after 5 years, after every 5 year improvement is required, so the life of that component of the land has limited life, then depreciation need to be carried. based on India's 16 only. Correct? So if the land has limited life, it will be depreciated as per India's 16. Understood? Yes, sir, we have understood. Impairment loss. Can I say impairment loss will be recognized as per India's 36? We'll discuss impairment loss under India's 36, not in the India's 16. But what India's 16 says, compensation from third party. What India's 16 says, any compensation which are received or receivable from third party for an item of PP that is impaired. So if suppose any PP is damaged and you are receiving any claim from insurance company, so that is compensation from third party. So when it should be recognized in PL, so what India 16 says should be included in PL when the compensation is receivable. When the compensation become receivable, it means what? When there is a virtual certainty of inflow. Correct? Now right now, when inflow has virtual certainty, inflow has virtual certainty means chances are more than 95%. Chances are more than 95%. Understood? Yes, sir. Derecognition, the last point. Now about derecognition, so can I say any item of PP will recognize, any item of PP will be derecognized on disposal, correct? Or when no future economic benefit is expected to flow, either from use or from sale. No future economic benefit is expected to flow to the entity either from use of such asset or from sale of such asset. Correct? Yes, sir. Correct. So it will be derecognized means it will be removed from the balance sheet. Yes, sir. Correct. Now, how to calculate gain or loss on derecognition? It will be sale proceed minus cost of disposal. Correct. And the net sale proceed will be compared with the carrying amount of the asset on the date of sale. The difference will be gain or loss. One clarification has been given that this gain should not be considered as revenue as per Ind AS 115. So this gain will be other income, not revenue as per Ind AS 115. But one special point has been given. Let me explain you the special point. The example, this example I have given in every batch, very good example. Suppose a car dealer has purchased car, and out of this car some car is held for sale in ordinary course of business. So can I say this will be inventory and Ind AS 2 will be applicable, and some car is held for rental to other. So can I say if it is held for rental to other, so it will be classified as PP and Ind AS 16 will be applicable. Correct. So can I say we'll apply cost model or revaluation model at each reporting date for such car. Correct. Now as per the entity's policy, this car will be ceased to be rented after 2 years. Means it will be given on rent only for 2 years. Once it is ceased to be given rented, it will be included in inventory for sale in the ordinary course of business. Correct? Are you getting what I am saying? Means the car is given on rent only for the first 2 years. Once the 2 year is expired, it will be ceased to be given on rent and this will be held for sale. So what India 16 says, once it is held for sale in the ordinary course of business, this car will be reclassified from PP to inventory at carrying amount, and sale of such car will be considered as revenue as per Ind AS 115. Sale of such car, sale of such car which is initially given on rent, but now once it is ceased to be given rent, are held for sale in the ordinary course of business. Such car sale will be considered as revenue in the ordinary course of business. I am expecting a question on this. Expected. This point is also expected from examination point of view. Correct? So what they say? If an entity transferred an item of PP which was held for rental to which was held for rental, so it was transferred from PP to inventory. When it ceases to be rented and become held for sale in the ordinary course of business, carrying amount of such PP will be considered as cost price of inventory. So what journal entry will do? Inventory account debit to PP at carrying amount, and that carrying amount will become the cost price of inventory. Yes, sir. Sale of such inventory will be recognized as revenue as per Ind AS 115. Understood. To be completed Ind AS 16. We completed India 16, but now one more point, applicability, scope. So can you say India 16 is not applicable to PP which is classified as held for sale, because for that India's 105 is applicable. Any biological asset other than bearer plant. Oh. Any biological asset other than bearer plant means for bearer plant India 16 is applicable, but for other biological assets which are not bearer plant, India's 41 is applicable. So what a bearer plant? So bearer plant are those plant which satisfy three conditions. First, which is used in production or supply of agricultural produce, which is used in production or supply of agricultural produce, which is expected to be a production for more than one period, and which are not held for sale as agricultural produce during its life. If these three conditions are satisfied, then it is a bearer plant. For example, let us understand mango tree. Mango tree. It is a plant. Can I say it is a plant and which is used for production or supply of agricultural produce? So mango, for production of mango, and which are expected to bear produce for more than one period. And this plant is not held for sale as agriculture produce. This plant is not agriculture produce. This plant is not agriculture produce. Correct. Therefore, all the three conditions satisfied. Therefore, it is a bearer plant. However, if you say sugarcane tree, can you say this sugarcane tree? The third condition will not be satisfied, because sugarcane plant is itself an agricultural produce. Means when it will be harvested, the entire plant will be harvested and will be held for sale as agriculture produce during its life only. So therefore sugarcane plant is not a bearer plant. If I say annual crop, first condition will be satisfied, but second condition will not be satisfied, because they are not expected to produce, they are not expected to bear produce for more than one period. So this annual crop, first condition may be satisfied, but second condition is not satisfied, therefore it is not a bearer plant. One more example, if I say example of pine tree. Pine tree. So pine tree is used for decoration purpose. So can I say they are not used for production or supply of agriculture produce? There is no agriculture produce from pine tree. Therefore, this is not a bearer plant. So only bearer plant India 16 is applicable. Any biological acid which are plant but not bearer plant, India 16 is not applicable. India's 41 is applicable. India's 41 is applicable. I hope you are understanding. Correct. Then point number C, recognition and measurement of exploration and evaluation of mineral resources. India's 106 is covered. India's 106 is not in our syllabus. Thank you very much. Mineral right and mineral reserve. India's 16 is not applicable. However, there is no India's on mineral rights and mineral reserve. So that is outside the syllabus also. Correct? Yes, sir. Understood. Disclosure, do by your own. Disclosure आपको खुद करना है. Understood. Now, cost of bearer plant will be identified by applying the principle whatever we have used for self-constructed property, plant and equipment. Because bearer plant will be always self-constructed. So if you want to find out cost price, you need to apply the principle whatever we have done for self-constructed property, plant and equipment. Understood? Yes, sir, we have understood. Correct. With this, we completed the entire concept of India 16. Now, everyone respond. Have you understood whatever we have done? If you have understood, now we can come to questions. If you permit me, we'll come to some questions. Will you permit me? Respond. Yes, sir. Yes, sir. Now, Come to question number 5 of the question bank. I will not take all the question. I will take the question where I feel the student have doubt. Come to question number 5 of question bank. I hope you have all downloaded the question bank. Yes, 11.6. On 1st April 2001, an item of PP is offered for sale at rupees 10 million with payment terms being 3 equal installment of 33 lakh 33,333 over 2 year period. Payments are made on 1st April 2001, 31st March 2002 and 31st March 2003. Means 33 lakh 33,333 is paid at 3 point of time over 2 year. Over 2 year. The property developer is offering a discount of 5% if payment is made in full at the time of completion of sale. So can I say this 5% is trade discount? This 5% is trade discount means purchase price at normal credit term. When I say normal credit term means it can be either cash or credit at normal credit term. So can I say normal purchase price will be equal to 100 lakh minus 5 lakh is equal to 95 lakh. 95 lakh, correct now. So this is purchase price at normal credit terms or at cash sales or on cash purchase. Understood? Yes, sir. Correct. They have also given implicit interest rate at 5.36%. Implicit interest rate means interest rate which has been used for this particular transaction. So can I say if you calculate present value of future payment means these three payment at 5.36, it will be always equal to 95 lakh. Check कर लो present value of 33 lakh 33,333 discounted by using 5.36% will be equal to 95 lakh means the cost price of PP will be equal to 95 lakh. So what journal entry you'll do? Property, plant and equipment 95 lakh debit, and you have paid on the date of transaction you have paid 33 lakh 33,333, 33 lakh 33,333, and to payable will be a difference amount. This is on 1st April 2001. Can I say on 31st March 2002 you will pass the journal entry of interest. Interest will be calculated on the outstanding balance for 1 year. Outstanding balance was how much? 61 lakh 66,667 into what? 5.36%. So interest expense will be 3 lakh 30,533. And you have paid how much? 33 lakh 33,333. The difference between these two amount, will be reduction in liability, so the account payable will be debited 30 lakh 2,800. Same type of accounting treatment you have done in hire purchase. Means there is nothing new, but you need to understand what India 16 says. The last journal entry will be same. Second year interest expense will be calculated, interest expense account debit to cash and bank, and the difference will be what? Account payable. Correct? Yes, sir. I hope you have understood. Yes, sir. Understood. I'm doing the only those questions where you will have doubt. Now come to question number, everyone. Question number 17, and that is an expected question. Question number 17. X Limited started construction on a building for its own use on 1st April 2000. The following costs are incurred. Purchase price of land, of course, this will be taken into consideration. Stamp duty and legal fee, it will be capitalized. Architect fee will be capitalized. Site preparation cost will be capitalized. Material will be capitalized. Direct labor cost will be capitalized. General overhead will not be capitalized. So if the question is silent, always we need to assume that general overhead are not directly attributable cost. The word is only general. Yes, sir. Other relevant information: material costing rupees 1 lakh had been spoiled and therefore wasted, and further rupees 1 lakh 50,000 was spent on account of faulty design work. Means there is some abnormal loss on direct material, so this will be charged to PL as an expense. So from material, we'll deduct 1 lakh and 1 lakh 50,000. This will not be capitalized. Yes, sir. As a result of this problem, work on the building was stopped for 2 weeks during November 2020, and it is estimated that 22,000 of the labor cost related to that period. So can you see this is the abnormal loss for direct labor? So this will also not be capitalized. So for direct labor cost, we'll do minus 22,000 minus 22,000. Understood? Yes, sir. X Limited has taken a loan for rupees 40 lakh on 1st April 2000 for the construction of building. The loan carried an interest rate of 8% per annum and is repayable on 1st April 2002. Calculate the cost of building that will be included in tangible non-current asset as an addition. Now doubt about borrowing cost will come. Can you say borrowing cost will be capitalized? Borrowing cost will be capitalized if it is directly attributable to for the construction of a qualifying asset. And qualifying assets are those assets which take substantial period of time for getting ready for its intended use. Substantial period of time. So can I say we need to calculate it is the construction is for how many months? Construction is for how many months? So can I say construction of building was completed? It is completed on 1st Jan 2001. It is brought to use on 1st April 2001. This is not at all relevant. It was ready on 1st Jan 2001 and it was started on 1st April 2000. Correct now. So can I say it is 9 months? 9 months now whether it is substantial, it is not substantial depend upon your assumption. Means you can assume 9 months is substantial, you can also assume 9 months is not substantial. If you assume 9 months is not substantial, then interest will not be capitalized. If you assume 9 months is substantial, then interest will be capitalized. However, institute has assumed that 9 months is not substantial. It depends upon the facts and circumstances of each case. Means if question is silent, then you need to become management. I will say give both answer. Give both answer. If 9 months is considered as substantial, then interest will be capitalized. If 9 months is not substantial, interest will not be capitalized as per Ind AS 23. Correct? As per Ind AS 23. Correct. Now, if it is not substantial, then no calculation required. But if it's substantial, you to calculate borrowing cost. Borrowing cost. So borrowing cost will be on 40 lakh. 40 lakh. For how many month? Rate of interest is what? 8%. For how many month? 9 month. But can you say out of this 9 month, 2 month, the production process was construction process was interrupted due to unnecessary activities. Due to unnecessary activities. So if you have done India's 23, you might be knowing that borrowing cost capitalization need to be suspended for these 2 months. So we can say in this case minus 0.5 month. It says 2 week now. 2 week means what? Half month? Are you getting 2 weeks? You can say 2 weeks. So half month. So this will be the amount of capitalization if you assume that 9 month is substantial. 9 month is substantial. Understood? So depending upon your assumption, your answer are correct. In the institute, they have assumed that the period of capitalization building is not substantial. You can also assume it is substantial. I will say give both answer. Because in some of the question they have assumed 6 months as also as substantial. They have assumed. Understood? Yes, sir. This question also you have understood? Then this question is also good, but I hope you can do it by your own. Question number 19 you can do by it your own. Question number 24, super expected and difficult question also. Most of the students do not understand the information given in question number 24. Therefore, I will do it on behalf of you. Question number 24. What they said? An entity has a nuclear power plant and a related decommissioning liability. Now you understood the related decommissioning liability. The nuclear plant started operating on 1st April 2001. So on 1st April 2001, yes sir. The plant has a useful life of 40 years and its initial cost is 1,20,000. This include an amount of decommissioning liability, decommissioning cost of rupees 10,000, which represent rupees 70,400 in estimated cash flow payable in 40 years, discounted at risk adjusted rate of 5%. 5% means, can I say initial cost? will be purchase price, which is 1,10,000, added by decommissioning cost 10,000, and the total cost become 1,20,000. So they have given 1,20,000, which include decommissioning cost, yes sir. And this decommissioning cost is the present value of 70,400 for 40 year, discounted at 5% rate of interest. Understood? Yes sir. The entity's financial year end on March 31. Assume that market based discounted cash flow valuation is rupees 1,50,000 is obtained on 31st March 2004. Correct? Means on 31st March, on 31st March 2004, on 31st March 2004, they have done some market based measurement, and they have calculated the fair value by using discounted cash flow, and the discounted cash flow is 1,15,000. So we can say this is fair value for revaluation model. Yes sir. This valuation is after deduction of an allowance of rupees 11,600 for decommissioning cost, which represent no change in the original estimate after unwinding of 3-year discount. Unwinding of 3-year discounting means what? We need to add interest for 3 year. You can see this is what, 3 year. Now if you add 3-year interest on this, 3-year interest add करेंगे, 3-year interest at a rate of 5%. So this amount will come around 11,600. So guys, this 11,600 is nothing but present value of contractual cash outflow, which will be payable at the end of 40 year. Correct? Are you getting what I am saying? So this 11,600 is cash outflow, and this is already deducted to calculate what? Fair value. To calculate this fair value. Are you able to understand what I am saying? Once again I will read. Once again I will read. The valuation is after deduction of an allowance of rupees 11,600 for decommissioning cost. Means if you want to find out what is the fair value, so you need to find out ki how much cash inflow will be generated from the use of asset and what will be the cash outflow for decommissioning cost. So you will do discounting of this net cash flow. So when you will do discounting of this net cash flow, this is coming 1,15,000. So to calculate 1,50,000, already what has been deducted? This decommissioning cost has been deducted. And can I say decommissioning cost will be incurred at the time of sale, means on disposal. So this is disposal cost. This is disposal cost. Disposal cost means what? Cost to sale. Cost to sale. My question to you, revaluation is done at fair value or fair value less cost to sale? Everyone respond. Revaluation is done at fair value or fair value less cost to sale? Can I say revaluation is done at fair value, but can I say this is fair value less cost to sale? This is fair value less cost to sale. Are you able to understand why? Because decommissioning cost is already deducted to calculate 1,15,000. So this becomes fair value less cost to sale. But for revaluation you want fair value. So if you want fair value, what will be the amount of fair value? Bata? Amount of fair value will be equal to 1,15,000 plus 11,600. That is 1,26,600. 1,26,600. Have you understood this point? Have you understood this point? Yes, sir. Correct. So this was one special point which student, if they have not understood, they will not be able to solve it. So revaluation is done at fair value, not fair value less cost to sale. So if they have given fair value less cost to sale, to determine fair value, we need to add cost to sale. In which amount? In the amount of fair value less cost to sale. Yes, sir. Then what they have given? On 31st March 2005, the entity estimated that as a result of technological advances, the present value of decommissioning liability has decreased by rupees 5,000. so has been decreased by rupees 5,000. So on 31st March 2005, what they have said, कि the present value of decommissioning cost has been decreased by 5,000. Decreased by 5,000 means, can I say 11,600 will be first increased by 5% into 5%, correct? So this will be around 12,200. 12,200 approximate amount means, can I see this is the carrying amount of provision as on this date, which is now decreased by 5,000. So what is the new value of provision? New value of provision will be how much? Minus 5,000, that is 7,200 will be the new provision, new provisional amount after changes in estimate. Understood? Yes sir. Then the entity decide that full valuation of asset is needed at 31st March 2005 in order to ensure that carrying amount does not differ materially from fair value. The asset is now valued at rupees 1,07,000, which is net of an allowance for the reduced decommissioning liability. Means from this 1,07,000 also decommissioning cost is already deducted. So what has been given on this date? Once again, fair value less cost to sale has been given, that is 1,07,000. But if you want fair value, what you'll do? 1,07,000 plus 7,200, 7,200 this amount. So this will be 1,14,200. 1,14,200. Have you understood this point? Have you understood this point? If you have understood this, now you can understand the solution. Expected question. I am expecting this question from the last two attempts, but till now not asked. Understood? Correct. So what will be the accounting treatment? Let us do it. Correct. So can I say we need to first find out carrying amount of nuclear plant as per revaluation model as on 31st March 2005. Correct. So initial cost is 1,20,000. First will charge depreciation up to first 3 year. First 3 year depreciation. The depreciation will be 1,20,000 minus residual value, which is nil, divided by 40 into 3. That is 9,000 will be depreciation. Accumulated depreciation. So this will be carrying amount as on 31st March 2004 before revaluation. There are two revaluation given in the question. So this will be 1,11,000. Now this will be compared with fair value. So 1,11,000 will be 1,11,000 will be compared with fair value. And fair value we calculated was 1,26,600. So there is an increase with upward revaluation. So upward revaluation which will be credited to OCI as revaluation surplus will be 15,600. So can I say this become fair value as on the date of revaluation, that is 31st March 2004 after revaluation. Now we'll apply subsequent depreciation for 2004-2005 for remaining useful life, and remaining useful life will be 40 minus 3, that is 37. So this 1,26,600 will be depreciated for how many year? 37 year. That will come 3,420. So what is the carrying amount before revaluation on 31st March 2005? That is 1,23,180. Now this carrying amount will be compared with new fair value, that is 1,14,200. 1,14,200. So there is a decrease in asset value. That this decrease will be first adjust. This decrease will be first adjusted with revaluation to the extent available. Any excess decrease will be transferred to P. You remember? Yes, sir. So can I say there is a downward revaluation which will be debited to revaluation surplus 8,980, and the new carrying amount after revaluation will be 1,14,200. Correct. Now we need to also find out the carrying amount of decommissioning liability as on each date. So initial estimated value of the decommissioning liability was 10,000. It was given in the question only. Yes, sir. Now we'll add interest cost for 3 year. Interest cost for 3 year. So when we calculate interest cost, approximately it is 1,600. Means I have taken the approximate value as per the information given in the solution. You can take the exact amount. Exact amount is coming 1,576. In your solution, you can also take 1,576 if you want to take 1,576 for 3 year. Correct. It is 1,600. Yes, sir. Token is carrying amount of decommissioning liability as on 31st March 2004 will be 11,600. Now in this 1 second we'll add Once again we'll add interest expense for the last year, that will be equal to 600, means 6% will apply. Sorry, 5% will apply. 5% is coming 5% of 11,600 is coming 580. But in the suggested solution, because they have taken 600, we are also taking 600. Understood? In exam you can take 580. So it is coming 12,200, but now it is decreased by 5,000. So there is a decrease in liability due to reassessment 5,000. So new value is what? 7,200, which will come in the balance sheet in the liability side. Now this 5,000 decrease in liability, what will be the accounting treatment? That is given in Appendix A to Ind AS 16. Till now that we have not done. Correct. Now that will do, but what Appendix A to Ind AS 16 says, whenever there is changes in the carrying amount of decommissioning liability, and if you have adopted revaluation surplus, this changes, increase or decrease, will be adjusted with revaluation surplus. So this decrease is a gain. So this gain will be transferred to OCI revaluation surplus. So you can see I have written credited to revaluation surplus. Credited to revaluation surplus. Correct? Yes, sir. I hope you have understood. Correct? No doubt? Yes, sir. Balance you can understand with the solution. Now, one point is left, that is Appendix A to Ind AS 16. Let us do that also. Changes in the existing decommissioning, restoration and similar liability, Appendix A. So this was added to the index 16 because there is a doubt in the industry what will happen to the cost price of PP if there is a changes in the carrying amount of decommissioning liability. So for decommissioning liability changes, your reassessment will apply Ind AS 37, and Ind AS 37 says that this need to be reassessed as per the best estimate at each reporting date. So if there can be either increase or decrease in liability as per Ind AS 37, so what will be the effect in the amount of PP, that we need to understand. For this, what Ind AS 16 says, this depends upon which model we are using. If cost model, then what will do? If revaluation model, then what will do? Cost model simple. If there is an increase means what? Loss. Increase in liability means loss. So this will be added to the carrying amount. This will be added to the cost price of related asset. And there is a decrease in liability gain. So this gain will be deducted from the cost price of related asset. However, if the decrease is more than the carrying amount, then any excess gain will be transferred to PL. If the decrease in liability is more than the carrying amount, then excess gain will be immediately credited to PL. Yes, sir. If related asset is measured using revaluation model, so accounting is very simple. Then it will be adjusted with revaluation surplus. It will not be adjusted with the cost price of PP. Sorry, with the carrying amount of PP, because now it is measured fair value model. Revaluation model. So you can't change the fair value of asset. So in this case, increase in liability means what? Loss. So this loss will be debited directly to the OCI revaluation surplus to the extent available. Any excess loss will be debited to PL. And if there is a decrease in liability, there is a gain. So this gain will be credited to OCI revaluation surplus. So these changes will be credited directly to OCI as revaluation surplus. However, if this is the asset, means earlier the asset is downward revalued, then these gains will be first credited to PL to the extent of previous decrease. Any excess gain will be transferred to OCI as revaluation surplus. Means this accounting treatment, whatever we are doing right now, is similar to subsequent revaluation what we have done. Understood? Yes, sir, we have understood. Correct. Now there is one new question given by institute based on this, which is totally expected in exam. So let us do that. New question has been introduced. Very simple, but good question. Question number 26. Question number 26. So what they say, check करेंगे. S Limited has purchased an item of PP costing rupees 100 million, which has a useful life of 10 years. The entity has a contractual decommissioning and site restoration obligation estimated at 5 million to be incurred at the end of 10 years. Means they have an estimated dismantling cost of rupees 5 million. 5 million. Correct? Yes, sir. The current market-based discount rate is 8%. The company follow SLM method of depreciation. H Limited follow the cost model for accounting of PP. They are following cost model. Thank you very much. Determine the carrying value of an item of PP and decommissioning liability at each year and when there is no change in the expected decommissioning expense, expected timing incurring the expected timing of incurring the decommissioning expense or the discount rate, means there is no changes in decommissioning liability. Second, at the end of fourth year, the entity expect the estimated cash outflow on account of decommissioning and site restoration is to be incurred at the end of useful life of the asset will be 8 million in place of 5 million. Means there is changes in decommissioning cost, then what need to be done? Determine in case number B how H Limited need to account the changes in decommissioning liability. So it will be done as per Appendix A to Ind AS 16. Correct? Means simply, first we'll find out the initial cost. So can you see initial cost will be cost price 100 million. Then initial estimated amount of DRSL which will be present value of estimated amount discounted for how many year? 10 year, which will be 5 into 0.4632. This is present value factor at a rate of 8%. This will come 2.32. The total cost which need to be recognized as an item of PP will be 102.32. Then there are two cases. If there is no changes in DRS, so can I say this 102.32 will be recognized, will be amortized, will be depreciated over the useful life is 10 year on SLM basis. So you can see I have done 102.32 depreciation will remain same is divided by 10 we have done, and this is the carrying amount we can calculate. And can I say for DRSL means this is what DRSL, the opening liability is 2.32. Every year it will be increased by the interest element which is calculated at the rate of 8% on closing balance. So we can easily find out the carrying amount of DRSL at the end of each period. Yes sir. This is when changes is not there. Now if changes are there, then what need to be done? So can I say if there is changes in DRSL, first we need to find out carrying amount of DRSL at the end of fourth year. So carrying amount of DRSL at the DRSL means decommissioning liability at the end of fourth year, that is 3.15 already calculated. So 3.15. Now we'll calculate the new estimated amount. The present value of new estimated amount will be 8 million into present value factor for the remaining useful life. So out of 10, 4 year has been expired. So 6 years is the remaining useful life. So for 6 year at the rate of 8%, it will be 5.04. So there is an increase in liability. This increase in liability will be added to the cost price of asset. Means what journal entry you'll do? PP account debit to decommissioning liability 1.89. So can I say this 1.89 will be added to the cost price of PP at the end of fourth year, means after depreciation. Means if the changes are there, so from fifth year you need to calculate depreciation on new revised amount. You can see at the end of fourth year it was 61.39 which will be increased by 1.89. So it become what 63.28 at the beginning of fifth year, which will be depreciated during the remaining useful life, that is 6 year. So divide by 6 कर देंगे, that is new depreciation. Then for liability also we need to find out new liability, that is what 5.04. New liability is 5.04 after changes which need to be now which need to be what now which need to be added with the interest element every year. Then of course we can find out closing liability at the end of each reporting period. Very simple. Understood this much? Understood? I hope you have understood all the points. With this we completed in day 16. Other question, I don't feel there will be any doubt. If any doubt you can ask me, then we can take it in some other class. Correct now? So of course solution is given. Now you can read by your own. If some doubt is there, you can what? Ask me that doubt. So of course if there is some genuine doubt, I will take that question in the class only. Correct? So can we conclude that India 16 is over from examination point of view? If over, then we'll start new Indias without wasting your time. Bolo. Have you understood this much? Now, can we start once again? Yes. So now we'll take India's 38 without wasting your time intangible asset. Why I have taken intangible asset after property, plant and equipment? Because both are similar. Most of the point will be similar. So it will take less time. Yes, sir. Now, what is the meaning? Only we need to concentrate on meaning only. Meaning what? What they say? Intangible asset are asset which are identifiable, non-monetary, without physical substance. Without physical substance. So any asset which are identifiable, non-monetary, without physical substance will be intangible asset. Will be intangible asset. Understood? Now, to understand this meaning, we need to first understand what is the meaning of asset. Can I say asset means any resource which is arising from past activity. Asset means any resource which is arising from past activity which are under the control of the entity and which provide future economic benefit. Means asset, if you want to recognize an asset, it should meet two conditions. First is control, second is probable future economic benefit. If these two conditions is satisfied, then any asset can be recognized as an asset in the balance sheet. Any resource can be recognized as an asset in the balance sheet. Correct? Now, what is the meaning of control? Control means what? Power to obtain future economic benefit and has a right to restrict other person to use such asset. Means we have a power to derive economic benefit from such asset, and we have a right also to restrict other person to use it. Correct? Now, so if you can restrict other person to use it, even though you are not a legal owner, it will be under your control. Correct? Now, understood? Yes, sir. Probable future economic benefit, of course it must have probable future economic benefit. If it does not have probable future economic benefit, then it cannot be recognized as an asset. Understood? Then it must be identifiable. Identifiable means what? Ki it should be separable from other asset. It must be separable from other asset. So what in India's 38 says, if any one condition, they have given two conditions, any one condition is satisfied, it will be an identifiable asset. So what they said, an asset is an identifiable asset if any one of the following condition is satisfied. First, it is separable from other asset. It is separable from other assets. Sir, how it will be separable from other assets? Well, if it is capable of being sold separately, transferred separately, exchanged separately, can be given rent separately, can be licensed separately. So if it can be exchanged, sold, given on rent, transferred separately, so it means it is separable from other asset. Means it has its own identification. It has its own identification. Understood? Are you able to understand what I am saying? Correct? Have you understood? So can I suppose if I have a website, if I have a website and that website can be sold in the market to any other business, because in my website there are many traffic of CA student. So if some other institute want to purchase the website from me, so of course I can sell my website separately without selling my business. Without selling my business, I can sell my website or not? Yes, I can sell. So my website is an identifiable asset which can be separable from other asset, which can be separable from other asset. Understood? Yes, sir. Or if it is not separable but asset arises from contractual right, asset which arises from contractual right, even it is non-transferable. Means any asset which arises from contractual right, even if these rights are non-transferable, then also it can be intangible asset. For example, I purchase a route permit. I purchase a route permit to run bus in a particular route. Bus in a particular route means to operate bus in a particular route, I need to purchase a license from the government. The license is known as route permit. So this route permit I purchased for 5 years, and this is non-transferable. Means I cannot transfer this route permit to any other person. So can I say this asset has been arises from contractual right, and it is not transferable but can be used for 5 years. Therefore, it is an intangible asset. Intangible asset. Yes, sir. We have understood. Non-monetary. It must be non-monetary. So non-monetary are those assets which are not monetary asset. So to understand non-monetary asset, we need to first understand what is the meaning of monetary asset. So what is the monetary asset? Monetary asset are those assets. Monetary asset are those assets which has fixed or determinable number of units of currency, which has fixed or determinable number of units of currency, means either the number of currency realizable is fixed or it can be determined, means it can be estimated, or which are realizable in terms of money. Money means cash or checks. It does not mean cash equivalent, means it is realizable in terms of cash, then it is monetary item. Means can I say all receivable which are realizable in cash are monetary item in simple word. So any receivable which are realizable in terms of money are monetary item. So can I say property, plant and equipment are not realizable in cash, so it is non-monetary item. But debtors are realizable in cash, so it is a monetary item. Are you getting what I am saying? So only monetary item, sorry, only non-monetary item can be intangible asset. Monetary item cannot be an intangible asset. Correct now. Why such point was given? Can I say if I say debtor account debit to sales, so this debtor is an asset, and this debtor means contractual right to receive cash. So guys, this debtor is also intangible in nature, but being monetary, it cannot be an intangible asset. It is intangible in nature, but not non-monetary item. Therefore, it cannot be intangible asset. So all intangible item are not intangible asset. For intangible asset, they need to first meet the definition criteria. So intangible asset are non-monetary item. They are not a monetary item. Yes, sir. Understood? Yes, sir. Without physical substance. So of course, can I say from the bachpan we are doing the intangible asset are without physical substance. But can I say there are many intangible assets which require some storage device. Means suppose you purchase a software for using in the business purpose. So the software will be stored in a hard disk or pen drive or compact disc CD. So means most of the intangible assets require a storage device. Correct. So they are stored in a tangible component. But can I say the cost of tangible component is insignificant as compared to the cost of intangible component. Cost of tangible component is insignificant in relation to the cost of intangible component. Therefore, the entire asset will be classified as intangible asset. Correct now. Therefore, the entire asset will be intangible asset. Understood? Means to give a clear picture, can I say in this way? If the cost price of intangible component is significant, then it will be intangible asset and we to apply Ind AS 36. But if both cost are significant, means we have tangible component and intangible component in one item of an asset and both costs are significant. For example, can I see if you purchase laptop will be with an inbuilt operating system, means operating system will be a intangible component and laptop will be a tangible component. Are you able to understand what I am saying? So what in there 38 says, if intangible component is an integral part of tangible component. In integral part means tangible component cannot be used without tangible component cannot be used without intangible component. It is an integral part. Correct now. Then the entire asset will be PP and apply Ind AS 16. Now even though you are applying Ind AS 16, but for depreciation you need to follow component accounting. Correct now. You know that depreciation will be based on component accounting. So any cost of a component having significant cost will be depreciated separately. Yes, sir. However, if intangible component is not an integral part of intangible asset, then both need to be separated. Both need to be separated. So for intangible component, we will apply Ind AS 38. For tangible component, we need to apply 16. Correct. For example, a simple example, I will say tally software which are used in a laptop. So you purchase a laptop with tally software, but tally software is not an integral part of laptop. Laptop can be used without tally software. So that tally software will be a separate component, and that laptop will be a separate component. You need to separate it and apply different Indias. Understood? Yes, sir. We have understood. Correct? Yes, sir. We have understood. So I hope you have understood the meaning of intangible asset. Once again, I will read. Intangible assets are those assets which are identifiable. Now you have understood identifiable, which are non-monetary. You have understood the non-monetary, which are without physical substance. Correct. Now one more point is written. Held for use in production of goods, a supply of goods to other, rental to other admin purpose. This point has been deleted from Ind AS 38. However, it was under AS 26, but now it is not there under Ind AS 38. Why? Because we are defining intangible asset. In case of PP, we have defined property, plant and equipment, not tangible asset. So guys, the intangible asset can be also inventory if it is held for sale in the ordinary course of business. Are you able to understand? Means just try to understand. Tangible asset can be inventory, can be PP. So Ind AS to define inventory and PP define property, plant and equipment. Means we have not, Ind AS has not given a definition of intangible asset. टेंजिबल एसेट का डेफिनेशन नहीं किया हमने. यस सर. तो फॉर दिस वी अप्लाई इंडिया 16. और टेंजिबल एसेट कैन बी इन्वेस्टमेंट प्रॉपर्टी आल्सो. फॉर दिस इन्वेस्टमेंट प्रॉपर्टी विल अप्लाई इंडिया 40. But under Ind AS 38, we are defining intangible asset. Can I say this inventory intangible asset may be held for sale in the ordinary course of business? Then Ind AS 2 will be applicable. So what Ind AS 38 says, कि intangible assets which are held for sale in the ordinary course of business scoped out from Ind AS 38 and Ind AS 2 will be applicable. But for remaining intangible asset, Ind AS 38 will be applicable. Ind AS 38 will be applicable. Have you understood this point? Have you understood this point? Therefore, this was actually not required. So only this much definition. Yes, sir. Yes, sir. Now coming to the recognition criteria. Recognition criteria. Now, recognition criteria is what? An intangible, same to same whatever we have done under Ind AS 16. An intangible asset to be recognized if and only following conditions are satisfied. It is probable that future economic benefit are expected to flow to the entity from the use of such an asset, for use of such asset, and the cost can be measured reliably. Now, what Ind AS 38 says, in this both the conditions are important. Means for property, plant and equipment, always cost measurement is deemed to be satisfied. But in case of Ind AS 38, it might happen there are some intangible asset where cost cannot be measured reliably, even if they are providing future economic benefit. For example, internally generated goodwill. If I say internally generated goodwill, so goodwill, of course, that will provide future economic benefit. But can I say if this is self-generated goodwill, so it has not been created or generated at one point of time. It has taken what some period of time, and there are many expenditure which has been incurred to generate goodwill, but that cannot be directly attributable. For example, if I say my example, I have also some goodwill in the market. I have also some goodwill in the market. From because of that goodwill, my classes are my classes are available in the market and students are interested for that because of that goodwill now. So that goodwill has been generated in the last 13 years, last past 13 years. And the last 13 years, I have done many expenditure, for example, promotional expenditure, free classes, correct classes at concessional rate. This all I have done. And because of that classes, you have free classes, you have promotional activity, I have some goodwill in the market. But can you say that cannot be directly attributable to the goodwill. Therefore, cost cannot be measured reliably. Understood? Yes, sir. So, if cost cannot be measured reliably, the entire expenditure will be charged to profit and also count as an expense. Therefore, in Bachpan, you have seen that self-generated goodwill cannot be recognized in the books of account because of AS 26, Ind AS 38. Yes, sir. Then initial measurement of intangible asset. Always initial measurement will be done at cost. Initially at cost. Now, if it is separate acquisition, then cost will be purchase price plus what? Directly attributable cost of preparing the asset for its intended use. Now, you know purchase price, you know directly attributable cost. Yes, sir. Deferred settlement terms similar to India 16 means if the payment is deferred beyond normal credit period, cost price of intangible asset acquired will be equal to present value of all future payment. Interest will be difference between future payment minus present value of future payment. Interest will be recognized as an expense over the period of credit unless it is covered under Ind AS 23. Same thing. Yes, sir. Then acquired in exchange of non-monetary assets similar to Ind AS 16. Similar to Ind AS 16. Similar to Ind AS 16. What we have done, cost price of intangible asset acquired will be equal to fair value of asset given up plus minus cash adjustment or fair value of asset received, whichever is clearly evident. However, the first preference will be given to fair value of asset given up. If the fair value cannot be measured reliably or exchange transaction lacks commercial substance, then cost price of intangible asset acquired will be equal to carrying amount of asset given up plus minus cash adjustment. Understood? Yes, sir. Then acquisition as a part of business combination. This I will do after this point. Internally generated intangible asset. Internally generated intangible asset. Now, can I say internally generated intangible asset are of two types. Those internally generated intangible asset for which cost cannot be measured. And there are many internally generated intangible assets for which cost can be measured. So can I say those internally generated intangible assets for which cost cannot be measured reliably will not be recognized as an intangible asset. So here intangible asset will not be recognized. For example, internally generated brand, internally generated publishing title means right now I have published one book in their Sarans. The name of the book, that is publishing title. Right now it is new to the market. New to the market. So it might not be so much popular in the market. But I have a firm belief that within 7 to 8 months, it will have a lot of demand in the market. Are you getting what I am saying? Okay, right now I have published one book in their Sarans. This is a publishing title. Are you able to understand what I am saying? So in their Sarans, right now it does not have value in the market. I know because it is not in demand. But I have firm belief that after 8 to 9 months, every student will approach me for this India Sarans book because it has been designed in a very beautiful way. Have all the point which is important from examination, means every point, whether important, not important, everything has been given in a very concise way. It is colorful book also. Are you getting? So can this publishing title is an internally generated asset, and after 8 9 months when it will have a demand in the market, so of course there will be probable future economic benefit from such asset. But can I say we cannot identify the cost of that intangible asset? Even though I have done many, I am doing some promotional activity to promote such books. Correct, I am doing some promotional activity, but we cannot identify the cost which is directly attributable for the value of such book. Therefore, such publishing data which are internally generated should not be recognized as an intangible asset. Same example, Times of India. Times of India is a newspaper publishing title. So internally generated cost cannot be identified, but it has what? Value. It has future economic benefit. The title has future economic benefit. Understood? Yes, sir. But can you see the cost can be measured reliably? For example, if we are developing our own website internally, if we are developing our own software internally, if we are developing a know-how means know-how to knowledge to produce some item. So if you are developing some knowledge, if you are developing some software, if you're developing some website internally, so of course cost can be measured reliably. Then in that situation, what Ind AS 38 says, there are two phases. One is known as research phase, one is known as development phase. Understood? Research phase, development phase. Correct. Now, what Ind AS 38 says, कि during research phase, no intangible asset is created. Are you getting? Only we are gaining knowledge about intangible asset. Therefore, future economic benefit cannot be expected from such intangible asset. Therefore, it will not be recognized as an intangible asset. Entire amount will be charged to PL as an expense immediately. Yes, sir. So, for this, recognize as an expense when it is incurred. But under development phase, when you started developing an intangible asset, so can I say you will do development only when there is a future economic benefit? If there is no future economic benefit, then no development will be started. But then also Ind AS 38 says, if you want to capitalize the expenditure during development phase, you need to meet six conditions. And if all the six conditions is satisfied, then you can recognize such expenditure as an intangible asset. What this is, recognize as an intangible asset if and only if an entity can demonstrate all the following. First, technical feasibility of completing the intangible asset. Technical feasibility of completing the intangible asset is intention. There must be intention to complete the intangible asset. First, point number one, there must be technical feasibility of completing the intangible asset. Means if there is no technical feasibility, so there is no probable future economic benefit. Correct. There must be intention to complete intangible asset. Means you started development without an intention. Means you started study. If you started studying CA without intention to complete it, so of course there is no probable future economic benefit. So why we should recognize an intangible asset? Are you able to understand? Yes, sir. So there must be intention to complete. There must be ability to use or sell intangible asset. Yes, sir. Correct. There must be existence of market either for the output of intangible asset or from the intangible asset itself. Means either you can sell the output from intangible asset or you can sell the intangible asset. Then of course there is a probable future economic benefit. Correct. There must be availability of adequate technical, financial and other resources. Correct. And the ability to measure the expenditure reliably. Means can I say first five point focus on probable future economic benefit, and last point focus on cost. So there are two conditions only, probable future economic benefit and cost. But in case of development phase, India's 38 is more strict. Means they want a surety, means they have given some condition to check probable future economic benefit. Agree? Means they have given some checkpoint to find out whether there is a probable future economic benefit is there or not. If any one condition is not satisfied, then expenditure during development phase cannot be recognized as an intangible asset. It will be charged to profit and loss account as an expense immediately. Understood? Yes, sir, we have understood. Now, just try to understand. Suppose this is research phase and this expenditure will be charged to PL. And you started you started development phase from this point of time. But six conditions was satisfied at this point of time. So again, this expenditure will be charged to PL and this expenditure can be capitalized. Now doubt is what? Any past expenditure during development phase which was initially charged to PL as an expense, whether now it can be reversed and can be capitalized as an intangible asset. So what India's 38 says no. Once the expenditure has been charged to PL as an expense, it cannot be reversed and now it cannot be recognized as an intangible asset. Means this cannot be now recognized as an intangible asset. The very important point question may come from this point. The past expense which are already charged to PL cannot be reversed and recognized as an intangible asset. Yes, sir, we have understood. Correct. Now, then, any intangible asset acquired through government grant. However, this will be covered under Ind AS 20, but a specific clarification has been given under Ind AS 38 also. Okay, any intangible asset which is acquired to government grants should be measured as per Ind AS 20. So what Ind AS 20 says that such intangible assets will be recognized either at fair value or either at nominal value or concessional value. Means two optional accounting treatment has been given. Either intangible asset can be recognized at fair value or it can be recognized either at nominal value or concessional value. Are you getting? Means if you acquire an intangible asset from government free of cost, even though the fair value of the asset is 1 lakh, so either you can recognize at 1 lakh or at nominal value. Nominal value means insignificant value. Understood? Yes, sir. I hope you know this point. No discussion required. Now, acquisition as a part of business combination. Business combination means 103. Means detailed discussion, of course, of this intangible asset acquired in a business combination will be done under Ind AS 103. But what Ind AS 38 says? What Ind AS 38 says? Ki as per Ind AS 103, if an intangible asset acquired in a business combination, the cost of that intangible asset will be its fair value on acquisition date. Means if any intangible asset acquired in case of business combination, then cost price of such intangible asset will be its fair value on acquisition date. Correct? But which intangible asset other than goodwill? Other than goodwill. Understood? Yes, sir. Correct. Now, probability recognition criteria is always considered to be satisfied for intangible asset acquired in business combination. Means if any intangible asset which is acquired in business combination, always the probability condition will be deemed to satisfied if it is measured at fair value. If it has some fair value, so always the probability condition will be satisfied. Yes, sir. Yes, sir. Now, an acquirer means the company which is purchasing the business. Correct now. Recognized at acquisition date separately from goodwill. Means this intangible asset will be recognized separately from goodwill. An intangible asset of the acquiry means the selling company. Correct. Irrespective of whether the asset had been recognized by the acquiry before the business combination, it might happen there is some intangible asset which was not recognized in the books of acquiry because it does not meet the recognition criteria, but it can be recognized in the books of acquirer even though it was not recognized in the books of acquiry. Understood? Yes, sir. Correct. Understood. Then how to calculate goodwill? Goodwill, so one formula, I hope if you have done business combination, this formula you know: fair value of consideration paid, fair value of previously held equity interest, plus fair value of proportionate share in INA of subsidiary company. Correct now. So fair value or proportionate share in INA of NCI. You remember this thing. The total of these, from this will deduct fair value of INA. INA means identifiable net asset. Identifiable net asset including intangible asset. So this INA will be including intangible asset at fair value. And the difference will be goodwill. So goodwill will be always balancing figure. It will not be recognized as fair value. It will be as balancing figure. Correct? Understood? Or it can be gain on bargain purchase. Correct? Yes, sir. This point, I have done this point for this special point. What they said. The acquirer recognized as an asset separately from goodwill an in-process research and development project of acquiry if the project meet the definition of an intangible asset. Just try to understand. Suppose this is an acquiry. This is acquirer and they have a research project of rupees 100 lakh. So again, this research project in their book will be charged to PL as an expense because any expenditure during research phase will not be capitalized, will charge to PL as an expense. Correct now? Understood? But this research project, if I want to acquire this business, so I need to pay for some research project and the fair value of this project is suppose 120 lakh. So when we acquire this, so this research project means in-house research project can be recognized in the books of acquiry if it meet a definition of intangible asset, means if they are identifiable, non-monetary, without physical substance. And of course it will meet. So if I want to acquire research project, it means it has future economic benefit and it can be measured fair value. So this will be recognized in the balance sheet of acquirer, even though it was not recognized in the books of acquiree. Even though development phase is not started, it will be recognized as an intangible asset in the books of acquirer. Understood? This was a very special point. Expected question from this. Expected question from this. Understood? Yes, sir, we have understood. Correct? This also you have understood? Correct. This much any doubt? Yes, sir, no doubt. Then coming to the subsequent recognition of intangible asset is same to same what we have done for what? Property, plant and equipment. Means two options are there: cost model, revaluation model. Whatever we have done for accounting treatment for revaluation model, everything is same. So no changes for here. So you can refer in day 16 for subsequent recognition. Yes, sir. Then amortization. For amortization, all items of intangible asset are divided into two types. One, intangible asset having finite useful life, and intangible asset having indefinite useful life. Indefinite useful life. So if any intangible asset has finite useful life, so of course it will be amortized over the useful life of such asset. So we need to first find out depreciable amount. The depreciable amount under cost model and the fair value model will be same. So cost price less residual value. Under revaluation model, it is fair value on revaluation date minus residual value. Yes, sir. What is residual value? What Index 38 says for intangible asset, residual value will be always assumed to be zero. Will be assumed to be zero. Unless there is a commitment by third party that he want to purchase the asset at the end of useful life, or there is an active market. So normally the residual value of intangible asset will be zero, because normally intangible asset does not have an active market. But if there is an active market for such intangible asset, then we can estimate the residual value. Or if there is some commitment given by the third party. Yes, sir. Amortization period same. It will commence. The amortization will commence from the date when the intangible asset is ready or available for use. Correct. It will cease from the date when the asset is classified as held for sale, or the date when the asset is derecognized, whichever is earlier. Whichever is earlier. Correct. Yes, sir. Amortization method same to same. SLM, RBM, production unit method. However, India's 38 says that if the pattern of future economic benefit expected to be consumed by the entity is not measurable, then we can use SLM. Then we can use SLM. Correct. Then review of residual value, useful life and depreciation matter same thing. It will be reviewed at least at the end of each financial year. Any change will be accounted as changes in accounting estimate and will to apply Ind AS 8 prospective basis. Understood? Yes, sir. Correct. Then indefinite useful life. Indefinite useful life. So whenever intangible asset is indefinite life, so can you say we cannot amortize it? So no amortization. But such asset will be impaired. Means it does not mean this asset will not be impaired. Any intangible asset having finite life will be impaired, but only when there is an indicator of impairment. India's 36 says that impairment testing will be done only when there is an indicator of impairment. But for intangible asset having indefinite life, what they said, impairment testing will be done on annual basis, irrespective of indicator. Correct? So they are impaired, either they are impaired annually as well as whenever there is an indicator. Means even though there is no indicator, such intangible asset need to be tested for impairment. How to do impairment? In day 36. Yes, sir. Correct. This point. Then derecognition of intangible assets, same to same what we have done for Ind AS 16. Correct. Understood. Scope. So this Ind AS 38 is not applicable to intangible asset held for sale in the ordinary course of business. It is not applicable to deferred tax asset. Ind AS 12 is applicable. It is not applicable to finance lease of intangible asset. Correct. So if any intangible asset which is acquired under finance lease, so initial recognition is done as per Ind AS 116. Subsequent recognition can be done as per Ind AS 38. Understood? Yes, sir. Goodwill arising in case of business combination, Ind AS 103 is applicable. Yes, sir. Asset arising from employee benefit, Ind AS 19 is applicable. All financial asset means financial asset, now you know because you have done Ind AS 109. So Ind AS 109(32) is applicable. Intangible asset arising under insurance contract, Ind AS 104 is applicable. For that, this Ind AS 104 is not in syllabus. Intangible asset classified as held for sale, Ind AS 105 is applicable. Correct. Any exploration and evaluation asset, Ind AS 106 is applicable, which is not in our syllabus. Yes, sir. Disclosure you can do by your own. Have you understood this much? Correct. Have you understood this much? What we'll do, we'll take a break of half an hour. Then once again we'll come back and we'll do the balance part. I hope you have understood this much and you'll appreciate whatever I have done till now. We have done only Ind AS 16 and Ind AS 38, but I hope you have understood each and every point. Correct? We'll meet after half an hour. Till then, bye bye. Take care.